live, then he has a link to send it. That's it. Okay, cool. Okay, yeah.
Okay.
All right, so
Sure, we'll do it.
in 3, 2, 1, go.
Hi, welcome to CoinDesk Live. I'm Pete Rizzo, editor at CoinDesk. Today, Bitcoin is back trading below its 2019 highs, but with the market apt to move, we're bringing you interviews with experts who understand the ins and outs of what's happening and can give you insight into how the crypto markets are moving. Of course, you can follow us on YouTube, youtube.com/CoinDesk, and on Twitch. Up now to my left, we have Mr. Justin Chow, a global head of business development at Cumberland, the crypto asset arm of DRW, and one of the largest and most active traders in the crypto markets. Welcome, Justin.
Thanks, Pete, for having me.
So first question, what's the reason for the market decline yesterday?
Straight to the point, I like it. I think overnight, I mean, the bottom line on both the rally up and then the last 30 hours or so, or 24-hour decline, is actually a bit of more of a systemic reason behind it. So rather than going into the details of, who's buying and who's selling or how did it happen, the point I'd like to make today is that in the last couple of months, since about April, the liquidity profile in the market has changed dramatically.
Okay, when you say liquidity profile, what is that?
So it's a good question. So liquidity profile effectively is the amount of liquidity in the market for one to be able to buy or sell crypto or any asset class. So if you think about something like the stock market or the FX market, these are very, very liquid markets. You can buy and sell tremendous amounts of these assets with very little slippage.
So what's a average, I guess, is there a market average how much the liquidity profile will be in like a general market? Is it?
Yeah, I mean, I would say that the FX markets, for example, trade trillions per day.
Right.
So,
okay.
you look at something like Bitcoin and it trades, in the hundreds of millions or billions as well, but not in the trillions yet. Hopefully we get there. And so the point, I think, is that we look at the liquidity in the market, obviously as a market maker, we try to quote the best prices possible, but as the profile changes, it becomes more and more difficult to be aggressive with the pricing. And so when we look at the market, what has happened is the liquidity has been reduced by multiples. And that makes it very difficult for people to get the size they want without the market moving. And so when I see these type of parabolic moves, or what we call jump risk, it looks a little bit like, okay, somebody, whether they're large or not, was trying to buy or sell an asset, and because there was nothing to buy there, it just moved very quickly. And so what you've introduced in the system now is a market that has quite a bit of jump risk. It makes it more difficult to trade. It makes it more expensive to trade as well as transaction costs increase. And that's kind of the reason you get these sort of gappy moves. It doesn't necessarily mean there's a lot of size going through. It's always about the size relative to the liquidity available in the market.
Is that because there's less money on the sidelines? Is that what you're saying?
I think that's a good question. I think, and I don't know this exactly, but this is kind of my thought process behind it. It seems to me that towards the end of last year, you had a lot of sort of algorithmic trading firms and other market makers entering, and the introductions of, or the popularity with leverage trading. And so you could go in and you could make a market on an exchange with leverage, but it doesn't necessarily mean that you have the coins to deliver if you're a seller, or you have the fiat to buy if you're a buyer. It's leverage trading, right? And as the market started to move, you saw that the order books and the exchanges started to shrink as people basically reduced the amount of risk they wanted to take. And so that's kind of more the paradigm I'm talking about.
So you're mentioning about I want to go back to the liquidity profile there. What size trades were you seeing over the last few days? How does that compare to the last few months?
Yeah, so what was really interesting, maybe to highlight a bit into what we saw, is we definitely saw people in the run-up, being active and sort of selling ahead of the 10,000 level, trying to take profit, leaning on this big psychological level, but it wasn't astronomical amount of volume. And a lot of the counterparties we speak to, they come to us and they talk daily about the markets. They also ask the questions like, what is really going on, and what are we seeing here, and are these parabolic moves healthy, and are they going to be sustained in the long run? And then, of course, after it broke 10,000, I think there was a bit of flurry, and people were trying to chase it, saying, oh, 10,000 is broken, we're going to the moon, and they were trying to get in there, and perhaps positioning got one-sided, and people got long at not so great levels. And so, in classic, in any market in the world, you'll have a pullback, or effectively a reset to where the market probably should have been. People buying into the highs with excessive leverage probably had to reduce their risk on the drawback in the last overnight.
So were you seeing larger trades in Bitcoin terms or US dollar terms?
Definitely. I mean, whenever the market rallies, early holders, their notional value of the coins increase anyway. So if you're holding 100 coins at 3,000 versus 10,000, the dollar value is very different. So the sizes have certainly increased, and the volumes, I would say, in the last 3 or 4 months have picked up as well, which is quite exciting. The interest in the market from friends and hobbyists as well, outside of actual market participants, has increased also. So I think we're probably somewhere undergoing a miniature paradigm shift where new market participants are entertaining the idea of coming in, but it doesn't necessarily mean that this run-up today was caused by a whole new wave of money coming in. I think that is still on the sideline and potentially very close to entering the space. And of course, the introduction of more products and new exchanges and fiat on-ramps has made it easier now for people to enter this space and get access and exposure to crypto, which reduces the friction for the masses to be able to partake in this market.
Once again, taking questions on YouTube and Twitch. I guess my next question would be, why $13,000? Is there a specific reason that you think people, were ready to sell at that price level?
Well, again, I think it without going into too much detail, I think it has to do again with the positioning. One of the things that people forget about any market is that positioning is incredibly important. A market can operate in an equilibrium or a disequilibrium, and when it gets too far into disequilibrium, then you have a correction. And so the pace of which crypto or Bitcoin effectively moved from 7,500 to 13,005 or 8 was pretty astronomical. I mean, you're talking almost a 80-90% increase in the price in not even effectively weeks. Yeah. So I mean that's really excessive price action. And even now, if you take a zoomed out view on the chart, one may even say that, oh, this correction here is not even noticeable. So I don't know if it's a psychological price per se, but more of a manifestation of the positionings in the market.
So have you processed a single takeaway from yesterday's events where you're saying, this is what I think happened?
Yeah, I mean, for last night's price action, I think we're still all trying to figure out what really happened. There's certainly some technical issues on some of the exchanges and some large orders that may have driven that.
Coinbase went down for a brief period.
Yeah, I think the real takeaway is in a market that's volatile, and especially for the audience today, just remember to be responsible with your risk management, right? It's really important to understand that as a market is more volatile, you have to size your positions accordingly and make sure that you're not taking excessive risk and that you can play for the long term.
Next question would be, what's really changed about the market now that we're at 13,000? Obviously, we started the year around 4,000, went down to 3,000. The spirits weren't very high. What does $13,000 change for your business? What does it change about the person who is active in this market?
Well, first and foremost, we've had a slew of positive news in the last sort of 3 months or so, right? Obviously, Facebook, they're announcing their entrance into the space. Other companies across the world, corporates, large corporates, established companies saying that they're entering. It's been fun for us because we get to talk to a lot of people who are looking at the industry and trying to understand what's going on. And those positive developments, as they reach the mainstream media, will somewhat get priced into the market. And so, the news flow, I would say, the sentiment has been more positive in the last 6 months. It has certainly caused the price action to reflect that. The other thing, again, as well, is that back in earlier this year when crypto was sub 4,000, let's say, it was very difficult for the market to move because there were large market makers out there absorbing liquidity. So if you went and you aggressed the market and tried to buy a lot of coins, you wouldn't really move it very much. And so we call that a vol dampening market, a market where people are on either side and it's hard for the market to break out. And then as crypto or Bitcoin broke sort of the 4,200 level, you started getting a market that was entering a new paradigm, and entering a paradigm where people were starting to chase the price action, starting to believe that, oh, this thing could be revived again. And so it becomes somewhat self-fulfilling. And there's a famous financier from traditional markets named George Soros, and he uses the term reflexivity, right? And so that's kind of how the market started to behave and manifest itself. And so it's really important for traders to understand what paradigm you're operating in. So if you're operating in a vol dampening paradigm, you don't really want to be sitting there waiting all day long for the market to have a huge move. You're probably going to range trade. And as the market starts to germinate and get ready for a large move, what we call vol expansion, then your mentality has to change as well. So that's sort of the way we look at markets, is trying to understand what paradigm are we in and what kind of style are we deploying to make sure that we're always protected and our risk is managed well.
I guess asking that another way, does $13,000 put a higher ceiling on the price this year? Might this be the highest that the Bitcoin price goes in 2019?
It's possible. I mean, those kind of things are very tough to predict.
People like to, though.
Yeah. I mean, crypto Twitter is always talking about people's views, and it's fun and entertaining to read them. I think it's very difficult even for professional traders. When we talk to,
but you got to start your day kind of writing down.
Definitely.
You gotta have some sort of idea of this is my sentiment. This is my long-term sentiment, short-term sentiment.
Yeah. So I think skills like technical analysis kind of help that out, and understanding of market positioning also helps it out. And then the fundamentals, what's driving the fundamentals. You can marry all these different sort of aspects of understanding markets. You get a stronger sense of whether or not you think this move is just the beginning, or is it kind of like moving too much too soon and we need a greater pullback. I'm a believer in both scenarios at this moment. I think it's very difficult. And so, when I look at it, I say, okay, well, the most important thing when I don't have clear vision and view on the market is making sure our risk is managed well. We're not, kind of rolling the dice. So, tactical trading, being patient, are all really important things. I do see scenarios where crypto and Bitcoin in particular, obviously Bitcoin dominance, I read somewhere, I think was
over 60%.
Yeah, over 60%, the highest since end of 2017.
Yes, that's correct.
December. Maybe I read it on CoinDesk.
Yeah.
And that's an important fact, right? So for the Bitcoin maximalists, they're obviously, their thesis is coming to play. And as more positive information or news flow for market participants entering the sphere come to the news, then you can expect that you might see positive reactions in crypto. However, I will say this: oftentimes news, the price action sort of gets ahead of the news flow, and people, it's not sustainable again because it's
buy the hype, sell the news.
Correct. It's current market participants over levering to buy into the news.
Right.
But you still need additional capital to come in to the market, and that's a very important thing. And so if you look at some of the indicators out there that show more quote unquote institutional retail capital is coming into the space, that's another positive thing, that the overall money base in the crypto markets is increasing organically, right? And inorganically.
Yeah. Obviously, though, compared to the institutional capital pool, cryptocurrency is still minuscule. What do you think the outlook is for the rest of the year in terms of institutional capital? Do you think we'll see more endowments, more pensions? I know I've seen a few. Yeah. Do they become players at $13,000? Is that something that has changed because of this?
So I think fundamentally, we need to understand that it's difficult for large regulated financial institutions such as endowments and pensions to actually gain direct access to crypto.
But they individually can, right? That's the thing.
Theoretically, their employees could,
right.
But it's difficult for people to say, "Hey, I'm going to buy some crypto for my pension and stick it on a cold storage device," right? What we're seeing now is we're seeing some of these institutional investors invest in funds per se or projects directly in equity. Or as LPs into funds.
What's an example of that?
I can't name names, but there are some funds in the West Coast that have recently raised money from institutions. I think it was in the news as well, so people can search it up. But that's probably going to be the preceding move from these bigger institutions because it's not that easy for them to trade the asset right away. So a good example in the traditional markets, you could say, okay, well, I am Columbia Endowment. I'm not going to go and buy Apple stock directly. I'm going to go and invest in a fund that invests in technology companies, that kind of thing. So I give my money to a hedge fund manager, and he buys, various tech stocks. Here, we're probably going to see that same move where large capital bases and allocators allocate to crypto funds to invest in the underlying assets for them because they understand the technology. They've got a insured custody provider, something like that, right? So that's what I'm expecting sort of the next 6 months. And I think from there, we're going to continue to see more and more quote-unquote institutional type players, but understanding how institutions operate and where they operate on the risk curve is really important. So the ones that are willing to take the leap of faith and participate in a riskier proposition like crypto, they're probably going to be the first movers. And something like a pension endowment or sovereign wealth fund will be the later movers, and banks probably on the later side as well.
Something I think that's unique about this recent rally compared to 2017 is obviously we didn't have a regulated U.S. futures market during the big upswing in 2017. Yeah. Does having the CME online now increase the risk for I guess retail buyers who might have money out in the market that the market gets leveraged back down again from 13,000?
Well, it could actually work in both ways. And right now, what I think we see in the CME is that open positions are quite large and long positions are quite large. I think my understanding of how it operates is that a lot of the people who participate and trade on the CME for example, would be institutions that have access to retail client bases. So it is not necessarily true per se that it's financial institutions that are buying the CME. It could be, but I think a lot of it could be also institutions that have access to retail clientele. So it's
So
still
you're saying
very
it's
retail.
the assumption that the CME's entire order book is all institutions might not be accurate.
The order book may be, but the people that actually participate and are aggressing the market, or taking liquidity from the market, the takers, those are probably institutions that represent the end client being a retail participant.
So what are you looking for in the next week? Obviously at 13, about 12,000 now. We've been 11 to 13 over the last couple of days. What are you looking for over the next week to really figure out whether we're moving up or down?
Yeah. It's a really good question. I wish I had a stronger, more convicted answer on that one. I think.
Well, you mentioned Google Trends earlier. We talked about Google search volumes being a possible indicator.
That. Yeah. I would keep a close eye on the sentiment indicators. So crypto Twitter, for example.
How do you measure that? Exactly.
It's
just
tough.
if some guy's tweeting to the moon, you're just like,
yeah, you know, just kind of see people feeding off of each other. It's almost like looking through the comment section of YouTube, for example, and seeing sort of sentiment where people, you know, feeding back on a video.
Right.
I kind of see it the same way. I just kind of peruse, you know, throughout the day and see what the sentiment is for the major players out there. I think an important point is going back to the leverage idea. So understanding where leverage is right now, and whether or not we have new capital coming into the market. If there were to be new capital coming into the market, I would imagine that the market may continue to be buoyant and have the ability to continue to rise. But if there's a significant deleveraging, then you could see the market come down before that rising move again. So that's an important factor. The question that we need to ask ourselves is, you know, are the retail market participants highly levered at this moment or not?
Sorry, what does that mean? If the retail markets are highly
Yeah,
leveraged?
the individual participants in the market, are they very, very levered? So do they have cash and can they buy the dip? Or are they, you know, 100 times levered on some exchanges, and then if it goes down a little bit, they're getting...
So you're saying, like, was this last rally everybody just going all in?
Right.
Yeah.
Yeah, and that's a very difficult thing to measure. But that, you know, these are the kind of things that determine whether or not a move can continue or if it needs to take a breather.
One of the recent narratives we've been hearing is that, you know, Bitcoin, not blockchain, kind of the reversal of the narrative before, is becoming a little bit more mainstream. From the traders you're working with, your clients, do you see it as Bitcoin and everything else? Is that really what the current state of the crypto market is today?
It's a very good question. Let me think about this for a second. Certainly there's a handful of counterparties we trade with who are Bitcoin maximalists. And then I think there's a group of them from, you know, the past couple of years who look at the altcoin market and they say they look at it as a basket, or they pick individual altcoins that they think are interesting projects. And then there's a new wave of coins that are kind of this, you know, new world coins, for example, that are being released today, or you know, coming online and being, you know, traded. And I think this is where a lot of the larger, sort of more sophisticated counterparties that we deal with are focusing their attention outside of just the Bitcoin and the majors like the Bitcoin, Ethereum, et cetera. So, you know, this is something that kind of caught me a little bit by surprise because, you know, for us to look at these coins, it takes a lot of resources. And so,
Yeah, I was going to say.
yeah, and people will come to us and they'll say, hey, we want to trade this thing.
Do you trade Bean Cash or something like that? Yeah.
Exactly. And so when the counterparties we deal with are interested in something, that's interesting for me. And so definitely this new wave of grouping of coins coming out that people are focusing on is quite exciting.
About how many coins do you guys trade? I mean, what percentage of the market have you actively traded?
It's pretty small. Yeah, it's pretty small. I mean, a lot of the coins, they just don't have liquidity. And so we're not able to, you know, provide quality, you know, liquidity.
What is the market size that you look for? Is there a clear benchmark?
You know, it's not an actual sort of formula. It's a function of a couple of things.
I figure like $1 billion used to be kind of like a
we'll trade some stuff that's a little smaller than that.
Okay.
Yeah, and what it requires for us to take those positions onto our balance sheet. But you know, kind of the thumb in the air rule, finger in the air rule for us is if our counterparties are interested, we'll try our best to see if we can provide liquidity. Yeah. Interesting.
I guess follow up to a question to that: is there anything that you see in terms of you know, immediate changes where we see more activity in the alternative cryptocurrency market? I guess just looking back to 2017, so much activity in the space beyond Bitcoin.
Yeah.
Now, not so much. Does this rally in Bitcoin sort of spur excitement in the wider varieties of cryptocurrencies?
Yeah, I mean, we have this discussion with our counterparties all the time. Is this a Bitcoin market and the alts it's game over, or this new wave?
Alt season, if
right?
you will.
Exactly. Or are they going to catch up? And so,
Right.
I think when we kind of take a soft survey of our counterparties, the views are quite divided. Some people feel like the alt season is over, and some feel like, oh, they want to start buying alts to play catch up to Bitcoin.
Right.
So it's pretty bifurcated view out there, and we don't have a particular view as well.
So I have some thoughts on this, but something I've been chewing on lately is, does Bitcoin have to get back to all-time high to draw mainstream interest?
I don't think so.
No.
No.
Okay.
I don't think so. I think as long as it's interesting and moving and volatile, people will be excited about it.
But we really haven't seen, I think people came here yesterday, they were really talking about, haven't seen Google search go up, not seeing a lot of new buyers. So you're saying, like, even if we don't cross 20,000 again, you still think that we can continue sort of an upward trend in market interest?
Yeah, and maybe I can highlight some of the stuff we see to explain why.
I would
think
probably
that's the
disagree
case.
with that. Just maybe play devil's advocate here.
Sure, no, absolutely. I mean, I think first and foremost, like when it's down at 3,000, the sentiment is so negative.
Right.
And people say, oh, the asset class is down 90%.
Like, why do I have a job here?
It's not only market participants. I would say the people that don't believe in crypto would say, oh, it's down 90%, it's game over, right? But even if you're not at all-time highs and you're in the tens of thousands, that's getting pretty close, right? And that's interesting that it's inching upwards. And what we see, for example, in our business, as I mentioned earlier, is people calling us up saying, hey, I'm not involved in crypto today, but I am the CEO of this company, and I want to know what's going on because it sounds pretty interesting. Or, we've got a lot of great personalities in the industry, and they'll go out there and they'll do business development for the whole industry. They'll go out there and they'll talk to their friends. And, even in this business trip for myself, I met with some people from my former life in FX trading and tried to share with them what's going on because I do believe this is something that's really interesting and that their skill sets could be applied here. And so I think as the industry grows, not necessarily in terms of the price, but grows in terms of the markets or the enthusiasts in the space continuing to spread the word, naturally you're going to spark interest from non-market participants who are going to look at crypto and say, is there something there for me? And the fact that we've started to see some pensions, for example, investing in companies in this space is also a step in the right direction. So it's almost like the butterfly effect. You have, a few guys who are out there and spreading the word and sharing about it, and then it starts to pick up pace. And at some point, you may get escape velocity, where a lot of folks who may have been skeptical of the space start to say, maybe there's actually something going on. And you actually are starting to see that a little bit in their commentaries, whether it's central banks and whatnot. And so, the sentiment overall is starting to change from the people that don't believe in crypto. And that is, in my opinion, a very, very important driving factor that could, continue to provide positive support into the industry's pricing.
But doesn't the Bitcoin price itself have to be higher, for instance, for the market to be big enough for institutional capital?
Yeah, it's actually it's a little ironic, and you're absolutely correct. Right. Venture capital firms can come in really early in a liquid market and buy some crypto and hold for the long term. But you're right, when institutions come in, they need liquidity. They cannot be participants in a market where the market's too small or the transaction cost and slippage is too high. So it's kind of funny because they may think it's a great opportunity to invest in crypto today, but they can't do that because of these constraints. And so they're forced to actually pay worse prices down the road. And so that's also part of the life cycle of an asset class, that even as it starts to go up, there may be an incremental buyer. And so one has to ask themselves, who are these people and how do they behave, and understand where they will come in along the price curve and evolutionary curve of crypto. And I think that's something that we try very, very hard to understand. Don, our founder, for example, is a very well-known financier. And so understanding how market participants in traditional markets behave and where they will come in crypto is really important in understanding the evolution of the asset class and the impact it has on the price.
Yeah, I guess my take on that would be that I think we have to get back to 20,000 just because psychologically it seems like crypto's sort of been written off, and as long as we're sort of in the shadow of the mountain, so to speak, I don't think the interest and excitement is going to come back. I think what we saw in 2017 is once you were at 1,000 again, there was no historical price, there was nothing to look at. It was the sky was the limit at that point.
Yeah.
So do you think that we need to have a parity to have that recovering of positivity, really?
No, I think as we get closer, already people are going to be like, "What's going on?" And you know, my friends who are not even in crypto, they know I'm involved in the space, and all of a sudden it breaks 10,000. I'm getting a bunch of text messages, and they're asking me, "What's going on? Should I get in?" And all these kind of questions. So people are paying attention. It's a worldwide phenomenon, which is very unique because I think this is the only asset class in kind of history that's seen this kind of global interest. And then in the other area as well is that there's just not as much supply in the market anymore. As you know, Bitcoin is capped, and down at the lows of last year, there were significant guys that came in to buy up quite a bit of coins. And so the supply in the market is also thinner than it was, you know, a year ago. So if you do want to accumulate significant amounts of coins, it's not that easy.
Interesting. I guess a final note here before we wrap up. Is there a catalyst in the next 6 to 12 months that you think could change the dynamic of the crypto market?
There's definitely stuff coming on the horizon that I can't address directly.
Okay.
But I would say,
insider information.
well, I mean, it's not insider. It's just, you know, people kind of the curiosity of certain types of individuals and companies. But I think, you know, in a broad brushstroke, that's basically it. You're going to see more and more large corporates looking at the space and finding ways to get involved, and those are proper use cases for the underlying assets. And so, you know, the theme for me right now is, can, you know, a crypto asset have a use case? Can it be a digital rail for payments, for example? And we're starting to see that play out. It's super exciting. Or, you know, can the smart contract per se be used as a mechanism to facilitate payment for services immediately? Something like delivery services, you know, so your delivery guy, instead of getting paid 30 days later in the mail and a paycheck, can he get his payment immediately via a token? So as we start to see more and more use cases, it's going to potentially bring about mass adoption. And so the exciting part for me is these types of companies coming in with active user bases in their markets already and introducing those folks to crypto assets, and the users not even realizing that, oh, I've got crypto in my app. So that's going to be a big story, I think.
Well, speculation certainly keeping us busy today. Justin, I'd like to thank you for coming on.
Thanks.
Appreciate the time and the
Appreciate
insights. And
Thanks,
where
Pete.
can people find more information about yourself and
Yeah, you can head over to our website at www.cumberland.io, and there's a contact page there. They can reach out to us, and someone from the team can pick that up and answer questions.
Great. And once again, you can find us on CoinDesk, www.coindesk.com, at CoinDesk on Twitter. Appreciate you guys tuning in. Thank you.
Thank you.
For 5 years.
Welcome back to CoinDesk Live. I'm Pete Rizzo, editor for CoinDesk. Today, Bitcoin is back trading below its 2019 highs, but with the market apt to move in either direction, we're bringing you interviews with crypto experts who are well-versed in the markets to break down what's happening, what can you expect, and the unexpected that might occur. To my left, the man who will be here for our session is Scott Freeman, a founding partner at JST Capital, a traditional financial services company in the crypto space. Welcome, Scott.
Thanks, Pete. Thanks for having me.
So, Scott, busy couple days.
It's been nuts.
As we speak, the Bitcoin price in the last 10 minutes gone down from 11,700 to 11,000. $700 drop in the last 10 minutes. What's your take on the recent activity?
You know, it's been very volatile, but we've been in crypto for over 4 years now. We've seen these periods before, right? So markets ran up really aggressively. It was 7,000, 8,000 a few weeks ago, went up to 13,000, maybe 14,000, come back down to 11,000. So, for guys like us who've been in it for a while, have been in finance for a while, we've seen these periods, and we'll see more of them. It's just the volatility in the space is high. We expect it'll stay high, and we expect we'll continue to see these movements.
So are your clients looking at crypto for the volatility? So when they see the $700 decline in the last 10 minutes, they're saying, this is why I'm here.
Absolutely. I mean, there's a whole set of clients that look to trade aggressively, and they'll trade short term. But I'd say most of our clients tend to be long-term holders, where they want to be in the ecosystem, kind of like us. We're looking to build a business for the long term. We're not looking to profit on short-term volatility. But a lot of our clients believe in crypto. They believe in the transformational properties of crypto, and they think that over the long term, these assets will continue to appreciate. So they don't really get too worried about these opportunities. The phones do ring, and they'll say, what's going on? Do I need to be worried? Is there a time to buy more or hedge my position? We work with a lot of clients on hedging strategies as well, so clients tend to be naturally long assets. So we'll sit down with them in advance and hopefully do a good job of hedging their positions, so we protect them against these aggressive drops and help them benefit from the upside moves as well.
So what is short-term volatility in your definition? Obviously, from 4,000 to 13,000 a few days ago. Big move in a short amount of time. Is that the definition of short-term volatility for you? Because that's a pretty good, you could have made a good penny on that.
Yeah, essentially, yes, right? It's how aggressively does the market move, and over what period of time does the market move? And yes, you could have made a pretty penny on that. And coming in, I was getting calls from clients saying they wish they had been longer. I'm guessing some clients bought yesterday and wish they weren't as long, right? So, these markets move. Right, and we expect that, and we try to educate our clients that they should expect that. If you're going to get in this market, which we think people should have some of their portfolio in this market, you've got to be comfortable losing. You've got to be comfortable losing 20, 30, 40% of your portfolio before it goes back up. It's just going to happen.
What's the biggest difference between this market today and what we saw in 2017, which is, I think, when a lot of people really started paying attention to crypto?
It's dramatically different. There's many more exchanges. There's many more places where you can get liquidity that didn't exist years ago. It's still primarily a retail-driven market. I would say primarily driven out of Asia.
And that's not your focus, though.
It is not our focus, but those flows tend to affect the market. So unlike traditional finance, where the markets are affected by institutional investors, you get big money coming in and out, and you see those sentiments moving. In this space, a lot of it is retail-driven. A lot of it is leveraged trades. So you do see markets gapping a little more. We think a lot of that is just reflective of guys getting in on leverage and getting blown out or doubling down more quickly. And because they're trading on leverage, those moves get exacerbated.
So how do you orient your clients? You mentioned kind of working with the traditional finance world. You bring them into Bitcoin, and then there's Bitcoin, Bitcoin Cash, Bitcoin SV, Bitcoin SV Plus, or all these
There's Ripple, there's ETH, there's Litecoin, there's a bunch of them, right? We
yeah.
tend to focus our clients on the major ones. So the top 5 to 10 is probably 95% of the clients. We tend to view any of the other assets as more of a venture investing.
So top 10 is your benchmark.
Top 10 is the benchmark. That's most of the demand is. When people sort of go down from there, we talk to them about the fact that these are mostly venture investments, and these are really high-risk investments. They move a lot, but they're less proven than the top 10. And so we just want to make sure they're aware of the risk there, essentially.
And so you mentioned the top 10 market cap, obviously a figure we use to kind of wrap our heads around what's going on in the market.
Right.
What are some other indicators you use to gauge the health of what's going on?
We like to see volumes traded. We like to see a good dispersion of volumes traded across lots of different exchanges. So we'll look at relative volumes, like a lot of the Asian exchanges. Are they trading more volume than the U.S. exchanges, for example? We look at the options market. We want to see how the options market is are responding to the spot market. We look at the futures market. You know, are the futures trading above or below the spot levels? How does that relate to the options market? So a lot of these things, you know, we've been in finance a long time. We have expectations of what those relationships should look like.
Are you placing trades on the futures exchanges?
We trade across all crypto. So we'll do options, we'll do futures. We, in addition to the client business that we do, where we help them execute, a big part of our business, we run systematic strategies. So we have a long history of trading systematic models. We do that for our own accounts, and we also have a lot of clients who trust us with their money, and we trade for our clients' accounts as well.
And those are private individuals, firms?
Nope. It's all hedge funds, asset managers, institutional investors, family offices. We don't do retail, but it's all high net worth people, or mostly family offices, things like that.
Interesting. Got a question here on the YouTube, and once again, taking questions YouTube and on Twitch. The question here is it worth buying Bitcoin on a $2,000 to $3,000 dip, or any dip for that matter?
Yeah, we think it is, but we would encourage people who buy. You've got to do long term. You can't get into this, and your stop loss, your get out can't be a 10 or 15% move, because you could literally hit that in an hour. So it doesn't make sense to get into it if you're not willing to take a loss in these positions.
So what does $13,000 Bitcoin signify, if anything? How does it change the market for this year?
You know, I think it changes people's interest in it. It starts getting on the front page of the Wall Street Journal, right? It starts getting on.
And we're back below $11,000.
It is, and it'll go to 9,000, right? It's going to go down, right?
Is that a firm prediction, or?
We try not to do that because we do a lot in the office where we try to figure out where it's going to go. I wouldn't be surprised if it hits 9,000, put it that way. But similarly, I wouldn't be surprised after this weekend if it's a 15,000. We've seen a lot of big moves on weekends in the last few months in particular. We think a lot of that's driven out of Asia. But we expect that to continue. So, you know, I think there's less liquidity on weekends, and what's happened is the market's gapped. It's a 24/7 market, right? It's a bit exhausting, right? Other markets don't operate like that.
So your thesis is that the price tends to kind of float?
It tends to be more volatile. We've seen much more volatility over the weekends. And we think a lot of that is reflective of the fact that people are not working as much, right? And since it is a retail-driven market, you can have smaller traders coming in and really moving the markets and expressing sentiment a little more aggressively. It's exhausting.
You mentioned traders based out in Asia. What is your gauge of the sentiment? Why would they be trading in higher volumes at this point?
I think a lot of it is it's a younger, the people who have traditionally been in crypto have been younger, right? The demographics trend younger. I think the markets, people are just more comfortable taking risk, right?
In Asia specifically.
Yes, the culture there, yes. If you look at sort of the other retail-driven trading markets like foreign exchange, retail foreign exchange is huge in Asia. We think a lot of that interest has bled over into the crypto space. You know, South Korea, Japan, Singapore, China, they're very big markets for.
And you think that's coming back because they are awakening to the risk appetite?
I think it's coming. It's growing. It continues to grow exponentially because you know you're out to drinks with a friend and they say I'm long Bitcoin at 4,000. It's at 13,000. Isn't that great? All of a sudden there's buzz and people go home and start opening up more crypto accounts and start trading it. And I think it's word of mouth, it's promotions, it's things like this. I think people like to have upside, you know, and especially if you're younger, you want to take more risk. You know, putting your money to work at 3 to 5% isn't that interesting for a lot of people. And if you can put into Bitcoin and think you can double your money in 6 months, you give it a whirl. What we want to just encourage people is just really, you've got to expect to lose, right? You've got to be willing to lose money or it's just not worth getting into these markets. And literally we've been telling people that, we've been in crypto for over 4 years. We've been telling people that for 4 years.
What is your estimation of the current sentiment about the crypto market? Obviously, it was a big run.
It was.
Maybe too much too fast.
Yep.
Is that going to put people off to maybe getting into crypto?
I don't think so. I think people's memories are pretty short term. But we
traders especially,
yeah, and it's actually a benefit, right? You want to be resilient. But we feel that it's going to continue to go over long term. We think that being in crypto is a good part of any asset management strategy, even a small percentage of your portfolio. It's an uncorrelated asset. These assets don't exist. You know, it's hard to find uncorrelated assets when you want places to invest, right? the volatility is very high. But for people to put some small percentage of their assets their portfolio into these assets, we think is a good strategy. We think that'll continue.
So curious for your take. Obviously, 13,500 was where we saw the recent top. Why do you think that number particularly turned people off? Do you have a gauge of what the market was thinking at the time?
We think these things are hard to predict, and we follow it and we talk to people, and we take a lot of it with a grain of salt. But we think that these markets doubled pretty quickly, right? And we were looking at levels $7,000, $8,000 a few weeks ago. I was looking at ETH this morning, and I think 3 weeks ago it was 230, 240, went up to 330, 340. It's a 50% move in 3 weeks. Like a lot of that is unsustainable, and people start taking profits out. It's really hard to gauge. I mean, you can watch all the Reddit feeds and Twitter and things like that, but it's really hard to. If you can predict it, we'll be rich and retired, right?
So it looks like we're going back towards 10. If this run sort of evaporates, what's the impact of that?
I think if it goes back to 7,000, 8,000 and sits there for a few months, I think people will be a little more sober about it. I think people will lick their wounds a little bit. But we just think that, again, if your perspective is long term, if you go back and say, okay, where was Bitcoin 6 months ago or a year ago, I'm pretty sure it's above where it was then. I guess it hit 20,000 way back when. We tend to look over that time horizon. We try to encourage people to do that as well. When people come to us and ask us to help them hedge, we try to not looking to hedge it for a week or two. We just don't think it's a very expensive thing to do. We generally dissuade people from doing that. We generally say, listen, let's look at 3, 6, 9 months and figure out how you can hedge your position. And we want people to take a really long-term view of these markets. And I think if you do, these blips goes to 8,000 to 13 to 11. 6 months from now, 9 months from now, if you look at a chart, there'll be a little blip there. You're not even going to recognize it. And that's kind of how that's how we think, because we've been in finance for a long time. We try to encourage our clients to think that way as well.
When you look out at the rest of 2019 and 2020, do you see catalysts for the crypto market? If so, what are they?
Yeah, it's a good question. I think we think that there'll be more regulatory clarity across a lot of jurisdictions. We think we are seeing more and more of the primary brokers. Fidelity's announced they're getting into this space.
Right, the digital asset services.
Exactly. Yeah. We think their competitors are getting into it as well.
Who would be their competitors there?
Well, I think, listen, who are the big competitors in that space? TD Ameritrade is a big competitor there. There's a bunch of guys who are in that retail brokerage space, right? I think people like that, if they haven't announced already, I wouldn't be surprised if they do announce. Plus, overseas, you're getting more and more of the foreign exchange companies that are offering their clients crypto. So I think what we're going to see is more traditional brokers / asset managers adding crypto to their universe of assets they offer their clients. And I think that will only, and I think that's driving a lot of this recent uptake as well, where people are saying, listen, Fidelity's getting into it. They have how many millions of clients? Other brokers are going to get into it. Other brokers are going to start offering crypto, either crypto as an asset or futures. At some point, we think there'll be ETFs on these things that'll all spur additional interest in these markets. So I think all of that is, and that's why we're kind of long term in this space, that if you believe that people will buy it, and the universe that owns crypto today is a really small percentage. Like if you look at the total market cap of crypto,
That's a tongue twister.
Right, relative to the overall market, it's small. It's nothing. Like we joke about it a lot in the office, like relative to real financial markets, it's a really small percentage of the overall assets are invested in crypto. If you just think that number moves up a little bit, it's bullish for the crypto market in general. So we think those trends will continue, and that will help support, an upturn in a lot of the prices over the next 6 to 9 months.
Once again, taking questions on YouTube. Going into the holiday weekend, of course, here in the U.S. next week. Obviously, spending time with friends and family. What kind of questions do you think you're going to get as a cryptocurrency professional, or do you have a strategy for going in there?
We're trying to take a break. We're trying to take a few hours off, and
your uncles, aunts,
they'll
nephews,
have these same questions that I've read about it on CNN, heard about it on CNN, or I saw it in the Wall Street Journal. My mom will call me and say, "You okay? You still have a job?" Right. I saw it went down, so I'll get those kind of calls. But it's really clients. A lot of you used to get the questions from your barber and the guy who shines your shoes. Now you're starting to get questions from friends who have said, you're doing that crypto thing. And now they're saying, well, it looks like it's here to stay. I think that's an important thing. I think you don't get the questions anymore is it going to survive? Is crypto going to be an asset class? I think people are more and more comfortable with that. There's still a few academics who would question you on that.
Sure.
But I think more and more people are saying, what is it? How do I get into it? Should I get into it? As opposed to saying, why are you doing this? This is crazy. This doesn't make any sense. It's not backed by any government. It's not real. So I think the questions have evolved from, is it real? Is it going to work? To, how do I get into it? Should I get into it? What's the right way to get into it?
You brought up something interesting there. Crypto is an asset class. I always like to ask the question, is it an asset class yet? I mean, a lot of these assets trade in tandem. Many of them don't have very proven value propositions. Are we at asset class yet?
I think Bitcoin absolutely is. I think the others are growing. Ether, Ripple in particular, I think have a lot of value.
XRP,
I'm sorry,
sir.
XRP, sorry about that. Have a lot of utility. And I think as you see more and more use cases actually being adopted and the underlying technology being used to solve problems, I think it'll just validate the hypothesis that these are real assets.
Right. I guess like just in percentage-wise, your estimation, how much of these really qualify, as...
That's why we focus on the top 10.
Okay.
We try not to, when clients ask us our opinion, if they want to be in the crypto space, what should I do? We really focus on the top 10. We have an index product that we built ourselves that we have a few clients in. I just focus on the top 14 cryptos. We do some volatility adjusting and market cap adjusting. We don't go any lower than that. There's just not enough volume in them, and the volatility is too crazy. The number, like what's number 12 versus what's number 14, flips a little bit, but we tend to focus on the top 10 to 12 currencies. We just don't think the others, they just haven't been proven out yet.
In the 2 to 12 range, is there another value proposition that you like? It's just something that appeals to you?
It's really tough. We were talking on the way in, as quantitative traders in this space, it's really hard to have a proposition that you can get really get behind. You can't, there's all sorts of models we run, and we do run some models that work in traditional finance. We run them in this space, and they tend to look at relationships, and we do some relative value trading, where you'll look at just movements over short time periods and relative value and buy some and sell others that where one is outperform or underperform. So there are basic strategies like that we look at. Some of them are really hard to stay behind for any long period of time, though.
Once again, taking questions on YouTube and on Twitch. We get some lively conversation there. So one guy says, all in on Tether. I don't know about that.
Wow.
But
that's something we didn't talk about. Have you seen how much that sold off in the last 2 days?
No, please. Yeah,
Huge.
what's
it was generally a trade at par for a long time. I think Tether, when I looked at it this morning, was about 97.5 cents. So it was about 2.5% below par, which we were shocked by. I don't know. We were trying to struggle with.
So we're talking about market irregularities here. Obviously, Tether's hugely traded stablecoin.
Yep.
So your theory is that there may be more Tether's influence on the market?
Yeah, we're not sure. We thought that one hypothesis we heard from clients is that people were selling Tether to buy Bitcoin, which is why they were anti-correlated, right? Where Bitcoin was running up and Tether was going down the other way. It's a really big move in Tether, though, if you think about it. It shouldn't be 2.5% away from par if you believe it's a stablecoin. That's a big move for a stablecoin. And we have clients calling us and just, what's up? And honestly, we don't have a good hypothesis other than if you believe in it, you think it'll come back to par at some point. But it really is causing some models to start acting a little bit nutty.
Do you use Tether in your trading at all?
We do. We use it just as a. We don't hold Tether. We try not to hold Tether. We try to discourage our clients from holding Tether, honestly.
Oh, really?
For this reason,
yeah.
like if it's a stable coin, you want it to be stable. But we do use it as a way to move assets.
Are we not building in too much expectations there? I feel like with stablecoins, it's like, do they really have to be $1? And in the defense of Tether or MakerDAO, which has also kind of struggled to put their DAI cryptocurrency at $1 peg, 97 cents to $1, what's the real difference there as long as people can use it?
Oh, it's huge.
Okay, it's huge.
Yeah, it's huge.
Yeah, enlighten me. What's the...
Well, listen, if you had $1 million, right, and you wanted to buy a house, and you think it's worth $1 million,
right,
maybe a car, I don't know what your interests are, and then overnight it goes down by 2.5%.
Right.
That's a big move for an asset that you think that you're never going to make money on. Like if you think you're holding an asset, like you have money in a bank account, you're making 2% on it, you're making 1.5%, whatever Chase or
the U.S. dollar is not. It's within 2-3%. Yeah. I mean, I know nothing about the FX.
No, but if you look at movement relative to other currencies, right? The U.S. these assets should be pegged to the U.S. dollar. So you're holding these assets instead of holding U.S. dollars.
Right.
So today, if you hold U.S. dollars, you can put them in a bank account, earn 1 or 2%. which doesn't sound like a lot, but if you have $50 million, that's a substantial amount of money. If overnight that asset that A, doesn't earn anything, or Tether earns no interest, is now down 2.5%, that's a big move. Especially when you're talking about institutional investors. And
So that just affects your ability to enter and exit market positions.
Yes, it costs you money. So if you're if you hedge a position where you've bought Tether and you have to sell it, you give it back to someone at maturity of a contract now that's worth 2.5% less, it's really gonna it could really affect the profitability of your trade.
So do you see the institutional people that you work with, do they like the sort of USDC or Paxos stablecoin model better than the Tether model?
We push them in that direction. We
Okay.
there's another stablecoin called Token.io we like a lot.
Oh,
We
yeah,
like the
that's
guys
right,
over
yeah.
there.
Okay.
The Paxos, Circle, TrueUSD, they're all a little bit different. You need to understand, when you're dealing with large amounts of money, you really need to understand the difference between the three, and that's what we talk to our clients about.
Interesting. Just peering at the comments here.
Yeah, I don't. If people have other ideas on why Tether's down 2.5%, we're all ears.
I think there's a lot of comments about how you're ignoring inflation.
Yes. Yeah, but you get paid for it. Yeah, you're ignoring inflation, but Tether's still an asset. Like if you get paid, if I ask you, do you want to?
This is the comment.
No,
of,
but if you want to own dollars or Tether, what would you rather own? Right, dollars you can put in a bank account, earn 1% or 1.25%. You can't earn anything on Tether.
I think Tether proved that people want to move dollars like Bitcoin.
It's an efficient way to move assets. I totally agree.
And I'm not quite sure that the Gemini and USDC stablecoins, because they require KYC in a lot of cases, they really offer that ability to trade dollars like Bitcoin.
They're not as liquid, right? Because what Tether has done well, it's offered on a lot of the more liquid exchanges. So it's a way to move assets on and off those exchanges relatively quickly.
I like to take a little bit of a defensive position of Tether, just because, well, this is it is controversial, but they really pioneered the model, right?
Oh,
it's
absolutely.
I think a lot of times in the crypto industry, you see kind of the first movers take a lot of heat. CoinMarketCap, right, also pioneered the model for data. They get a lot of heat for not being good enough, but for the most part, people are using Tether still.
I agree, but go back to any new market, like guys who pioneer and do clear the forest, generally are the ones who survive longer term in a lot of markets. I'm not saying they're not going to survive. I have no idea, but listen, there's some. We got concerned about it because of the regulatory scrutiny, right? I used to be a lawyer. I used to work at the Federal Reserve. I've seen this story play out a lot. Where there's smoke, there's usually fire. But as an investor, if you have two assets, one has some cloud over it, one doesn't, they're both stable coins, why would you put your money in one that has a cloud over it? There's just no reason to, right? Unless it provides some additional benefit. For most of our clients and most of the things we do, it doesn't give us enough of a benefit relative to other ways we can move assets around.
A lot of talk right now. Market's still trending down. We're at 10.6 now. I think that might be a 500 drop since this conversation started.
If only it was me. If only I can push the markets up or down. I know.
I guess my question would be, one of the other differences between 2017 and today is that we have the regulated futures. We have the CME, things like that. How do you expect that to affect this price run particularly?
It's a good question. I think the CME volumes have been picking up as of late. We don't do a lot of business there. Our clients don't do a lot of business there. I think there'll be some universal clients who will use it. Most people today use futures because of the leverage. You don't get leverage on the CME as far as I'm aware. I think maybe that'll change over time. But I think all of that helps get more people interested in the market, right? So you have traditional investors that like futures, that want to trade gold futures or FX futures or treasury futures. Again, it gives them another asset class to trade so they can just get into the market.
So I guess as you look out at the next week or two, what do you want to see? I guess what are you looking for to see how the market is developing?
We'd like to see a little less volatility, honestly. We'd like to see things calm down for some period of time. When we see volatile periods like this are usually followed by a less volatile period. We're hopeful that happens. Some of us
Do you want to see some sideways trading for something?
Yeah, to let it consolidate a little bit. Some of it's just selfish. I want to get some sleep, right? My clients want to get some sleep.
Right. About how many hours of sleep do you average during one of these runs? Yeah.
We're sleeping 4 to 5 hours a night.
Okay.
Yeah, it's tough, and it's we're 24/7. We have an office in Singapore as well, so we're 24/7, and you get a lot of phone calls. It's the risk phone calls. Markets are moving, clients are calling. You just got to we're a service business. We also have positions on, right? So you want to make sure that everything's operating the way you think it should be operating.
I get some more questions coming in. It seems like that Tether discussion live in some of our audience. This one just from Sammy Zuko. What percentage do you recommend for different assets, gold, silver, crypto, fiat stocks?
Crypto, I've seen people anywhere from 1% to 5% in your portfolio is what we've seen, and we've seen some pretty smart people doing some nice asset allocation studies. I think that level's probably safe at this point. I wouldn't do a lot more if you're looking at asset allocation. I think that's a good level. Think of it as another asset like gold. So whatever you're in for gold, it probably makes sense to be a similar level for this kind of asset. But again, you've got to be comfortable. This thing, crypto's going to be down 30, 40%. And if you can't suffer that loss in the next month, it's just not worth going into it.
As always, advise caution. But I guess we'll let you get out of here. Market is active as always. But thanks for everybody who tuned in and asked questions on YouTube and on Twitch. Scott, appreciate the time.
Thanks, Pete.
Where can people find out more about JST Capital?
JSTCap.com is our website, and I think we'll have a Twitter handle very soon.
Thanks a lot. Appreciate you guys tuning in.
2.
And welcome back to CoinDesk Live. I'm Pete Rizzo, editor for CoinDesk. Today, Bitcoin is back trading below its 2019 highs. The latest is we're hovering above 10,000, but with the market apt to move in either direction in just about any amount. We're bringing in a range of experts this afternoon to break down what's happening and what might happen in the days and weeks ahead. Up next, my next guest is Miss Kim Grauer?
Grauer.
I just totally butchered that. Senior economist at Chainalysis, a blockchain analysis company. Welcome to the show.
Thanks for having me.
So Kim, obviously Chainalysis, you're looking at the blockchain in a different way than traders. So maybe why don't you just take us in, what's the day-to-day like, what is your mandate in terms of looking at blockchain data?
Sure. Our core model, our core software product is a tool that tries to identify the services across 10 cryptocurrencies, Bitcoin, Ethereum, Litecoin, etc. And so when we're able to cluster lots of addresses together, we can actually get a better sense of what's happening on the blockchain. When people are choosing to send Bitcoin to certain exchanges, and that allows us to have a good sense of the on-chain activity with all these 10 cryptos that we track. And so our mandate is really kind of find out what's going on. We're not, we're kind of curious, and we just try and figure out, is there a signal in on-chain volumes? That's kind of the main thing we've been researching lately. Like, how do we find how to interpret on-chain activity between services? But we also do a lot of crime research.
Okay.
So criminal activity and economic research.
So maybe you can take people who are unfamiliar. Where does we have obviously all this market activity that's happening on exchanges. Then we have blockchain activity. The difference there is you're seeing people whose trades are executing on the actual software.
No,
whose transactions, I guess is a better word.
I guess the distinction here, and it's a distinction that I'm trying to figure out the best way to explain it, is you have the trading activity that's going on exchanges. And of course, some of it is faked, and so you have to, if you put that aside, in an ideal world, the buying and selling activity on an exchange is really representative of what people, what they're demanding and what they're trying to sell. But then crypto has this new variable, which is the on-chain volume. Right. So when is a transaction occurring between services? And so that is the type of activity that we really like to analyze and try and figure out. So what does it mean that suddenly there's a lot of activity between two certain exchanges? And how do you interpret that increase? Is it administrative? Is it noise? Or is it an actual signal?
Huh, very interesting. So obviously last few days, last week, very exciting in the crypto markets. What insights do you have into what's actually happening on the blockchain?
I did a little bit of research before this interview. And I just kind of played with a lot of different variables. We looked at price variables from trading, from order book data and on-chain data. And just overall, what we've seen is the volatility obviously is skyrocketed over I think almost a peak from this past year in terms of volatility, and all the assets seem to be becoming more correlated with each other overall.
Interesting, okay.
So, there are a lot of cryptocurrencies, they go through cycles of correlation, and we're kind of at a peak right now where a lot of the assets are very highly correlated with each other. And so that's just like how do you interpret that? You could could interpret it in a few different ways. But then also on-chain volumes have been going up, and trading volumes have been going up over the past week, year. I'll give you a stat. We've been focusing on Tether a lot.
Our last guest was really laying into Tether.
Oh, really? We've been really focusing. I've been spending almost every single day the past month in stablecoins. And just a stat that I found for this interview is the weekly trading volumes on Tether earlier this year was about 1 billion per week, and last week it was nearly 4 billion. And so it's, over 4 or 5x increase in on-chain trading transaction activity. On top of that, there's only, a few exchanges that are really prominent for trading Tether. I think there's probably five exchanges account for around 80% of the transaction activity for Tether. And so that's also been going up. So the activity is just kind of really increasing across all metrics for
Well, let's go.
the
Let's drill
economy.
down into the Tether because I think that's an interesting observation. So obviously, for people who are in the markets, Tether makes up for a vast amount of trading because a lot of the exchanges that just don't have access to regulated banks, they maybe can't move traditional currencies as easily. So you're saying it's basically quadrupled in that time, which could one draw the correlation that that means that activity on these exchanges that are maybe outside the U.S. that are less regulated that's what's going up here?
I think that it's hard to. We always struggle with assigning causality. So does the Bitcoin price cause Tether volumes to increase, or is it the reverse? One thing that we do know is this month alone, about 35% of all Tether issued on Ethereum was issued this month. And a lot of that was immediately before the bull run.
This is on the Ethereum blockchain?
Ethereum blockchain.
I thought so. I know that Tether trades on Omni now
Yeah.
and Tron also?
On Ethereum.
Okay. So Tether trades on 3 blockchains. And so to get the data on Tether, you have to look at kind of all of these different chains?
Yeah, we do. And I only drilled down into the Omni transaction data, but I looked at the issuances on Ethereum and Omni. And there were a lot of issuances in June, and so that kind of preceded the bull run, and so that leads that when you issue Tether, it's kind of a public event. So
a lot of people do tweet about it.
Yeah, people do tweet about it. Yeah. And I was talking to some of my coworkers about this, and we were saying, okay, so if there's a major Tether issuance, people presumably are going to use that Tether to buy other cryptocurrencies, right? I mean, what else?
Or maybe to just hold their asset and
I guess you
offering
could.
some stability.
You could. I think there was a Binance survey of their institutional customers who said that they do actually use Tether for store of value a lot. It would be hard to measure. I'd have to spend a lot of time to figure out how to measure store of value since most Tether is held on exchanges. But presumably, if there's a major issuance, there's probably the demand from the various exchanges for that Tether, unless ruling out, any nefarious activity, maybe they're pumping or dumping. I don't have any comments on that. I don't know. But if it is based on demand, presumably you can, if there's a major Tether issuance, you can assume, okay, maybe there's a lot of demand. So I can expect that possibly Bitcoin prices are going to go up because one of the most common trading pairs across most of the Tether accepting exchanges are the BTC USDT trading pair.
Right.
So it wouldn't be irrational to take a major Tether issuance as a signal that potentially you could expect some trading activity on Bitcoin or on other assets to go up.
So you're saying Tether's just a good example of on-chain activity shows that there was an increase, and therefore we're starting to see that these increases usually precede some sort of market activity in either direction.
Yeah.
Okay. And is that, based on your research, is that a fair conclusion at this point, that Tether has some relationship to those volatility periods?
I mean, it doesn't seem like any asset or any cryptocurrency is really on the outside of this market activity. Like I was saying before, a lot of the assets are really correlated with each other. I think just one of our researchers ran the correlations before this. It's 97% correlated with Ether at the moment, just from the past few weeks of price data, or 0.97. And so I would be reluctant to say that a Tether issuance results in is the reason why people you see this increase in price on Bitcoin, but it's definitely related, and there's a lot of other there's a lot of other things that Tether allows for on exchanges. For example, Tether accepting exchanges tend to have lower differences between their high and their low price within the day because it allows for that liquidity. So
interesting.
Yeah.
And once again, taking questions on CoinDesk Live here on YouTube and on Twitch. Coming back to that question and talking about Tether, I guess, how do you get on a subject matter like that, right? So what are you just intellectually curious about it, so you begin to explore it? Does that have a business a relationship with Chainalysis, or are you able to, as an economist there, just kind of explore what you find interesting?
We happen to track several several stable coins. So whenever we track a cryptocurrency, it means that we have access to a whole lot of data that other people don't. So it kind of begs the question to be researched, you know, because of just the fact that we are sitting on this data set and we probably should know what's going on.
Right.
And with stable coins, there's a lot of confusion around them. What is their purpose? How are people using them? And being able to answer that somehow, or provide a new perspective from the on-chain data, is probably our core motivation. Although it definitely, just looking at the on-chain data alone doesn't provide all the answers. Because, for example, let's try and find out if people are using Tether for a store of value or for a trading asset. Most of that's going to be happening on exchanges, and we just don't have access to that type of data.
Well, let's talk about data for a second, because I think something that's really fascinating. Earlier this year, when Bitcoin was trading at a low, a lot of conversation about data inconsistencies, right? We saw Tether, but we also saw a lot of negative sentiment about CoinMarketCap and some of their data that they put out. So I guess as you look out at this array of data services that we have, what is the robustness of that data?
Our data, if there's ever a real transaction that's registered between two addresses on Bitcoin, for example, it's, we have access to all of the blockchain data.
So blockchain data,
Great.
foolproof.
Yeah.
So where do we get actual data problems within the system, I guess is the question.
The thing that I think is the most problematic is the trading activity. We're actually trying to see if we can use the on-chain data to better approximate how much fake volumes are happening on exchanges.
Super interesting.
So if there's a very little amount of Bitcoin flowing to an exchange, but they have a ton of trading activity, that might be a signal that potentially that exchange is having some fake volumes. It's definitely not proof, because maybe there's some exchanges that just do a ton of trading activity against like how much Bitcoin is actually being sent to that exchange. So you can use our transaction volume potentially to speak about fake volumes.
Okay, interesting.
Other data.
Is that because, so sorry, I was actually
it's
confused
fine.
about this the other day. So, just thinking about, personally, I have a Coinbase account, I have a wallet address there, and I assume that is on the blockchain in some way. So if I have an exchange account, they're giving me an address. There is some relationship here between exchange users and the blockchain. Obviously, all my data from that account doesn't necessarily end up on the blockchain. I don't know.
It does. You're right. But you will have an account on Coinbase, and we through our heuristics, we cluster all of the Coinbase addresses together.
Oh, okay.
So yes, you do interact specifically with one Coinbase address. Once your funds are on there, it's unclear whether it gets swept into an internal. It probably does often get swept into an internal, like a cold storage wallet, just for security. So, for example, there's a lot of administrative movements for exchanges. So,
right, I've been reading a little bit about that recently. That's just people shuffling funds
around for security, or I mean, like they have to be really careful to protect their funds from being hacked. But what you would see in our software would just be, okay, your personal Electrum wallet sent Coinbase money, and it's like all of Coinbase's activities lumped in together. So does that make sense?
It does make sense, yeah. So you see the aggregate data rather than the specific data. Interesting. But it sounds like you're beginning to figure out that there's the sort of blockchain data, there's aggregate data we can get about exchanges, but the exchange data, it sounds like that's really where the data inconsistencies in the market, when people say there are data problems.
Yeah.
Is that the exchange level?
Yeah. I think it's about because it's self-reported to some extent. And so what happens on the blockchain, it's not self-reported, it's algorithmically, protected and cryptographically protected. But on the exchanges, whenever I think you introduce an element of people have to report something, and there's the element of human error or human trying to mislead you, or that's when the real data problem comes in.
And I know that you guys routinely kind of publish stuff or either work with media outlets to get some information out. Where is at what point do you guys feel like you find something on the blockchain, you need to publish that information? Is that because there has some public good?
Yeah. I think about that a lot.
Yeah.
I'm like, how do I?
Yeah. What do you kind of? Yeah. What do you just? Yeah. How do you?
How do I monetize what I do? Yeah. I hope that my company still sees value. No, I'm just kidding. We really have been given a lot of space to just try and figure out what's going on and not really being beholden to a lot of kind of commercial output. Although I think that the reports we make are useful for our clients. We have a lot of government, law enforcement, banking clients. So anyone interested in compliance-related issues find the crime reports very, very useful that we do.
Right.
In terms of the research, the economic research we do, I mean, we're a growing company. Maybe there's a product down the road if we do our research well enough. I don't know. I think that would be cool to have some sort of economic research be a product, whether or not it's a public product that we just put online, because our tagline is building transparency or building trust in blockchains. So it's evolving. We're a startup. We're evolving to the market. So.
What are, I guess, as you look at the different data sets that you've looked at, are there really big questions that you still don't know the answers to?
Yeah.
And if so, what's one that maybe you've been thinking about recently?
I mean, the one it's just been on my mind, so I'm going to bring it up again. But like, what is the trading signal in on-chain volumes? So how do people will build trading bots based on pricing activity that's available on order books. Is there a way that we could somehow find what is going on chain as kind of a predictor of what we can expect to see on exchanges? That's would be an incredible question to answer. Also, with Tether in particular, I'm dying to know first. When we started our Tether project, we were like, okay, what are we going to ask about Tether? We're going to figure out how much of it is arbitrage, how much of it is capital flight, and how much of the use is store of value. And then we realized, okay, we can't really answer those questions without making so many assumptions.
Right.
I mean, we recently put out a piece with DR, which was trying to show how much of Tether activity was due to capital flight by tracking funds.
That would be people who want to move money out of the country and evade regulations?
Regulation, most likely, I'd say. And we just did that by tracing the flow of funds from, Chinese-based exchanges to global exchanges. But maybe some part of that volume is something else. So it's just hard to get a precise estimate of how people are using these crypto assets. We also are really interested in how much commerce activity is happening, how much, and if so, I mean, we can see funds going through merchant services providers, but we don't really know how they're using them. Is it coffee shops, restaurants?
Right.
Is it what is it? And so
I was going to say, obviously, a lot of investors, people in the market, thinking about Bitcoin as a store of value these days. Do you see on-chain evidence that maybe that is more of the preferred use case than sort of the spending Bitcoin as cash that maybe was around prior?
I think that probably the best way to answer that question is to just slowly remove other things happening.
Right.
So let's look at the activity in the past year. Let's remove what's happening through commerce. Let's remove.
How do you prove that something is commerce?
We have, I think, 20 merchant service providers that we track that we have clustered their wallets together, and we're able to see how much is being sent to them, and that what's being sent to them is basically, you can assume.
And do they at some point validate your assumption that you've identified them, or how does that work?
We have received validation from a few of them, whether it be through their public reports, and then it matches the data that we have. But
this is like on the internet, no one knows you're a dog, that kind of stuff, right?
Yes.
You can't actually prove that the entity is the one, but you draw some conclusions and you think that it's highly likely to be.
Yeah. Well, no, we don't. We have like 100% threshold.
Oh, okay.
So we don't cluster something unless it's definitely what it is. But We have so many people employed at our company that are always trying to find new addresses. I mean, every day there's a lot of addresses that get made, whether it be by an exchange. So we have to continually be working to identify new services. Okay, there's a new person who decides to set up a merchant service provider. We hear about it. We have to take certain steps to ensure that we can get them attributed. I guess
So it sounds like you're starting to understand, like based on blockchain data, what kind of entity is operating
Yeah,
on the blockchain. That's kind of fascinating. So you're
It's
getting
very
a clearer
fascinating.
picture of like what's a consumer versus a company versus a
Yeah.
bot trader or something like that. And
Bot traders are tough because usually I think they're between two exchanges.
do you think that someday we'll be able to see that stuff very clearly? We'll know which entities are kind of transacting?
Potentially we can, we're never going to, we're really interested in like just tagging services. So maybe we're not really in the business of like finding out what an individual wallet, where an individual person's wallet is. We're interested in services because that is, I think, the answer to a lot of interesting economic questions. But I think that we'll continue to like expand our clustering and have a better sense of what's going on overall. But the second something, like for example on exchanges, we can monitor the flow of funds to exchanges, but we don't know what happens on the exchange. So there's always going to be a gap in our knowledge.
Yeah, we have a comment here. Most merchants are not holding BTC; they immediately convert to fiat. So is that something you would find that characteristic, and you'd say it's probably likely, given the way these wallets operate, that is a payment processor?
I've not. I don't know how to cluster.
Okay.
I don't do it.
Yeah.
I had actually a coworker saying, does that mean merchant services are essentially like cannibalizing cannibalizing the ecosystem, because the second there's crypto in the ecosystem and they're just converting it right away to US dollars, so that feels bad for crypto. But I think that maybe if the demand is there and demand keeps growing, it's okay that it's converted to US dollars, but who knows?
Maybe a bit of a larger question. I know that your title is an economist. We've heard this term crypto economics, obviously a hot concept. I guess, how do you define crypto economics? Have we arrived at a definition of what it is yet?
Yeah, I've thought about that. I don't have a good definition for crypto. Right now, I do a lot of looking at, I do a lot of data analysis because there's so much noise that a lot of what we've done so far has been, let's just get a clear picture of what's going on.
What is noise on a blockchain?
Noise on a blockchain change addresses. Have you seen this growing estimate? It's called adjusted economic transaction value. We call it economic transaction.
No, I haven't looked at that. Sounds
So
interesting.
it's so for a long time you would try and figure out what's going on chain. You'd go to maybe blockchain.info and look at the transaction volume.
Sure.
Turns out about 80% of that is noise.
Really?
Yeah.
Okay.
So
well, I've been using that a lot. So
well, the trend will be there if you're looking at the trend.
Right.
But if you're looking at value, a lot, and we work really hard to.
so that's a totally bunk statistic. So transaction volume.
I mean, the trend I think would be there, but so if it's trending up, they move in tandem. But if you wanted to know actually how much economic value, how much economic activity is happening on the exchange, then you would need to use an adjusted statistic because of largely because of change. But on top of that, you have to. There's a lot of, for example, when someone sends funds to someone else, sometimes it can pass through hundreds of addresses in however short a period of time it can possibly do that. And would each of those transfers? So I send to you, but I decide to send to you through 50 wallets.
So like a mixer or something like that.
Maybe a mixer. Maybe just it's like I'm really obsessed with security, so I just do it on my own.
Sure.
Would you, if I send you one Bitcoin through 50 addresses, is it fair to say that there was 50 Bitcoin in transaction value transacted in our exchange?
I see.
You have to kind of try and figure out how to whittle down the noise to get the true value.
So what is, you said 80% is about?
I think it was about
seems
80%.
really high, wow.
Yeah.
And so the metric you're trying to deliver is what the real economic
activity is.
Activity? Okay.
And so just going back to your question about cryptonomics, I think what we want to be able to do is to be able to explain what happened last week and on-chain and what's going to be happening the following week, and just to kind of provide clarity. So if there's a major price shift, like what we can
Occurring currently.
Yeah, which is occurring currently. So we could be able to say, we would be well positioned to be able to say what we think happened. So that's crypto economics to us.
Where are you at right now? So if I was to say, what's your take, like based on what you've seen? What percentage of the way there are you to a conclusion at this point?
About what's happened this week in particular?
Just taking it as a benchmark, yeah. So it seems like you have this idea of like a goal state, right? We want to be able to kind of take these exchange metrics and these blockchain metrics, and we want them to draw conclusions, but we're not there.
Yeah. I mean, I could say like which exchanges were the most active in the past week, which ones had major changes that are noteworthy, and we could have like report on that. So X exchange, for example, suddenly got a few really large transfers, and then the price on that exchange experienced a certain lead in terms of price growth. However, where we're really not there yet is being able to attribute causality, like what caused that transfer to happen. And I think that one of the reasons is I don't think that a lot of these price movements are attributed to one event. There was the Tether issuance that we talked about before, which is an event that preceded the price run. But is that the one reason, and then everything dominoed?
Yeah, it's almost like you have sentiment, and then sentiment translates to blockchain data, but we don't really know how. Is that essentially the question that you're attacking?
Yeah, exactly. We want to figure out as much as possible what is the lagging indicators and what are the indicators that follow. So does sentiment cause flows, Bitcoin flows to exchanges to increase, which then causes trading volumes, or is it what we're suspecting is happening is it's kind of very cyclical? So.
Sorry, why is that your expectation that it's cyclical?
Well, just that sentiment causes the price to go up, and then the price goes up, causes sentiment to go up, increase more.
So self-fulfilling cycle.
Yeah, that's probably a better way to say it.
So I guess maybe let's take an example. Like a lot of people have attributed this rise to something like Facebook. And, and that's something that you would look at the blockchain data. There's nothing that would turn up there.
I don't, unless you could find. Yeah, I don't think there would be anything to. There wouldn't be on-chain data unless you had an idea of which exchange you thought might have led based on who you think would be invested. But yeah.
Hey, we got some comments over here. Somebody says arbitrage accounts for a lot of transaction volume on-chain. Is that something that you would be able to see that people are not, probably not at all, right?
We can, I actually don't think it's that common for people to go, it might be. We are trying to figure this out actually, because every time you have a transaction, you have to pay a fee, right?
Right.
So does it make sense if it's possible to just go directly between exchanges?
Isn't that what the liquid model? I think there's people trying to do something like that.
Yeah, to avoid. So unless they have an intermediary wallet, and then we have actually tried to do this before, which I could speak to after, although if we have time. But if they have an intermediary wallet and we know that it's heavily involved in lots of small transactions between exchanges, that could be a candidate to be an arbitrage wallet.
Oh, okay.
But I don't know. They would be paying all these extra fees. I don't know if that makes sense to do.
Is there an incentive for these exchanges to make it harder for you to detect the things and assumptions that you're making about them?
For us, as a company?
Or I guess so. I'm saying that for the exchanges and the ecosystem, I guess the assumption here is that blockchain data gets better over time. We have a much better, clearer picture. But maybe people don't want to have a clear picture of what's going on.
Yeah, it's a really big part of the debate, the role of privacy. And
obviously, I imagine like the Zcash or Monero blockchains,
Yeah.
you guys wouldn't even look at those. Too difficult.
No, we're in an R&D sense, and it's just like in a general interest sense. But and we do have R&D efforts on those fronts. But in terms of like the philosophical privacy debate, I don't think we have a real comment on that.
Right, sure.
But yeah, so I don't know, what was the question we were at?
It was just about, I think we're identifying on the blockchains. We're trying to get to this goal state where we have a perfect picture, and then, is there an incentive for parties to sort of obfuscate their data or make it harder for you to figure out what it is that they're doing?
Yeah, I think that we partner with a lot of exchanges. We're their KYC solution. And we recently had a press release with working with Binance, and they are using. They need, if you want to grow, you need KYC, know your customer.
So you're finding that they're generally very supportive of working with you guys?
Yeah. Typically. I'm trying to think of a time it wasn't, and I can't think of one.
Okay, yeah, I was just curious because it is like, most Bitcoin users tend to be very sort of private individuals. I know you guys have had in the past, people have taken a certain view of blockchain analytics.
No, we don't unmask individuals. We just cluster services, and so we won't be about to like find your wallet or anything and publish on it. Yeah, and is that still the biggest misconception about what blockchain analytics is? Yeah, definitely.
Right. Interesting. Looking at some questions here.
I bet there will be questions.
People are saying that our ticker is behind the price.
Oh, no.
We're not able to keep up. One guy is asking what happened to my Bitcoins. I don't think you can answer that
What
question
happened
for
to
him.
your Bit? Oh, do you want me to?
I guess he's looking for his Bitcoins.
Are you one of the lost Bitcoins people?
I don't know.
We
Maybe
did a report on trying to estimate the amount of lost Bitcoins.
Oh, yeah.
And
what was the figure?
Oh, what was it? It was only a range because it's just based on the last time the Bitcoins
This would be Bitcoins
moved
that are removed from the market. So
for a certain period of time.
Yeah, I think that's interesting. Market cap is another figure that we tend to kind of use, but it's only so relative, right?
Yeah, I'm not sure. Ours is over $1 million dollars worth, or over $1 million Bitcoins, and I think it's been a while since I updated it. I think it was between like 1.5 and 2.5 or something.
Yeah, and this is a amount that's deducted from the supply, so we can assume that they'll never trade ever. I think that's always interesting because we calculate market caps and we assume that these coins are still active, but it's probable that the actual value of the coins is much less.
Yeah, calculating true market cap is something. I never used the measure market cap to do any research or anything. I understand the desire to have that number and have figures. I happen to not find it useful, maybe because of this problem, but I've read a ton of different literature on how to best.
Well, I guess we're still if you look at the market is still making investment decisions like based on stuff that we know is kind of like incorrect or somewhat flawed.
Yeah. I know. Yeah, especially. What is market cap trying to say, I guess? Is
I've actually thought about this. I think it's trying to say that it's trying to give you an idea of how much value is in the actual network itself. Or the relative size. I think that's the intent of it. Does it actually capture that? I'm not totally sure. But
no, I think you're right. Probably how much value is in. I've heard of other ones that say, okay, let's calculate how much was invested. So let's look at when people bought the Bitcoin and then look at market cap that way, so we could see how much people have actually invested overall. Again, I don't know because. Things like this lost Bitcoin. What would you do about that? How
does it affect you as a trader or a market participant? I guess it would affect a lot of estimates about your liquidity, the trades you can make. It could have a lot of downstream effects.
Absolutely. Especially since there's so many lost Bitcoins, according to our estimates at least. We should probably update it. It would be interesting to update it. It's probably only very, very marginally growing because most of the lost Bitcoins happened early on in the pre-2013 2013 or something.
Right, yeah.
So, but I think like up to 3 million was our estimate.
And so you mentioned like the economic value earlier. Is there another statistic you've come across recently where you're like, oh, that's really cool. I would have never thought we could measure that, or that people are measuring that, but we are now, and maybe it's telling us something new.
We also are working on what we call, based in economic transaction value, we're looking at what we call extending exposure.
Oh.
So that would be when a service, we're looking at the profile of an exchange based on where, of all the economically valuable transactions they're sending, where are they going? Which exchanges, which services are they going to? And so combining economic transaction value with the on-chain flows, which is economic transaction values between two counterparties, so exchange A and exchange B, looking at the amount of economic activity between two counterparties. And so that's also been an interesting thing to look at. Other metrics that we're
That's
working on.
fascinating. So you're looking at two entities there, and you're sort of getting an idea of their historical relationship?
Yeah.
Okay.
So how has it changed over time? And we've actually found, just for example, if we look at Tether, on certain exchanges, they tend to be over the history, net accumulating Tether from certain exchanges. So let's take Bitfinex, for example. Bitfinex
Not our
is...
favorite subject.
Oh, God. Oh, did I open the
I
flood?
don't know, we'll see.
Bitfinex is net sending Tether to a handful of exchanges, and they're not receiving, really. They're mostly receiving from the Tether Treasury, and a little bit from a few other exchanges.
Well, they own, or there's
They
some...
own. It
some,
makes sense.
Yeah, corporate relationship there.
It makes
right?
sense
Yeah.
why that is. And then you can do the same thing. Okay, so you're sending from Bitfinex to Huobi. Huobi is a net receiver from Bitfinex, but also a net sender to, for example, Binance, for example. So you can see these relationships by combining between the exchanges, by combining the economic transaction value with what we know about counterparties to see what's the nature of an exchange's relationship with another exchange. It's still kind of being fleshed out a little bit,
Yeah,
but
evolving science there. Well, I'd like to thank you for coming on, and thank you for the great questions on YouTube and Twitch. Yeah, as always, fascinated by what we're learning about blockchain, and still so much to learn. So we'll be back in about 15 minutes. Kim, where can people find out more about your work?
you can go to our blog, chainalysis.com, and then there's a blog tab there. And yeah, we also publish our research on Twitter, and so check us out, follow us.
Sometimes through CoinDesk, and of course, we'll be following the market movements today, having more great speakers with us the rest of the afternoon. Pete Rizzo again for CoinDesk. We'll be back with you in a moment.
Ready? Hey guys, we're back here at CoinDesk Live. This is Bitcoin in Flux, and I'm joined by Pete Rizzo. I don't know if you've met him before. He's our resident Bitcoin expert. Welcome.
I don't know about that, but I
Editor-in-chief
am
of
employed by
CoinDesk.
CoinDesk.
Yeah.
As you are.
As I am,
Recent development.
I'm news editor, and we're going to talk about your. Well, first off, let's talk about the folks that you had on. Let's do a quick recap of some of their thoughts on the market.
We had the head of OTC for Kraken, which is one of the world's largest exchanges. I was here yesterday. Nelson, really smart guy. We had the former head of Circle's OTC desk, a guy named YinFeng. Today, someone from Chainalysis talking about on-chain analytics. We had some more traders from JSD. A lot of trading folks coming here sharing the insights on what's been a really choppy period for Bitcoin.
So I don't own any cryptocurrencies. I don't actually understand them at all. So what should I be doing right now?
What do you mean?
Like, should I be buying a bunch of them right now?
Well, I'm not going to
dispense
dispense financial advice to
really?
our readers, but I'm happy to answer any questions about it. I mean, I certainly had thoughts about the market coming into this year, and I think a lot of those have been invalidated by what we've seen. Obviously, huge run-up. You expect a big decline. I said yesterday that at some point, when it was at 13,500, which is about the high, that we could go $4,000 up or $4,000 down, and I wouldn't have been particularly surprised either way.
So the expectation was that we were going to have. Were you expecting this big a dump this quickly? I mean, it seems like 8 hours ago we were.
Definitely, the order books were so thin. So one of the things that you would look at when trying to assess where the market's at is just look at overall volumes, the big S that came on, and then also you can just kind of validate this with exchanges yourself by looking at volumes. Just not as high as we've seen recently. The big volumes were at 13,500, where people seem to start. Cashing out finally.
That might be an interesting question. What should these folks at home be doing to pay attention to the markets? What should they be looking for in terms of very specifically?
Market data is very diffuse. I think a lot of it's still consolidated into some resources. I guess I use the CoinDesk Bitcoin Price Index. I think that's just a nice chart to look at. I don't think it's the best in terms of overall market data for that. I usually look at CoinMarketCap, but usually I go to order books for exchanges. So I would go to a Coinbase Pro order book or a Kraken order book, and then you can really see the buys and sells on either side. So generally what you'll find is that order books are just people saying I want to buy, I want to sell, and then you just have a bunch of random orders. Usually you'll see consolidations at periods. You'll see what's called a sell wall or a buy wall. So that means just there's an accumulation of orders at a certain point, and that if someone fills those orders, then basically everything above it kind of gets filled, if that makes sense. So I don't know how familiar you are with markets, because you worked in consumer tech.
No, I'm only familiar with televisions and.
I think you wrote about the rotary phone, right?
The rotary phone. I was one of the first guys.
You wrote the story about that, right? How did you get that story out?
We got it out by Pony Express. Thanks for cracking on my age. I really appreciate it. It's going to be a. It's going to be a good dynamic.
I thought this was a more casual show.
It's going to be a good dynamic down the line. What else? If you guys have any questions for this jerk.
But let's go back to what I was talking about. But I think yesterday it was just you see the market kind of enter a euphoria period, especially people like myself who are watching the market. You kind of go I didn't expect this. I don't know what's happening. The people who came on, a lot of their feedback was that they don't know that this is new money coming in. So they're unsure, essentially, that this is taking people who aren't already invested in Bitcoin and converting them into people who are invested. Their thoughts were that a lot of people are just doubling down. So if you have money in the market, people are re-upping or they're using it to buy more. I would say the sell-off sort of provides some evidence of that, right? If you were a new institutional buyer and you're going long, $13,000 doesn't mean anything more than to you than $10,000. But if you're trying to double your money quick, you could say that that's a plausible correlation.
So we're seeing a bunch of folks who saw the price go up.
People definitely took gains. So what you see when you see a huge sell-off is people are now saying, okay, I'm unsure if it's going to go up, so I'm going to take my money off the table and I'm going to get in lower.
But we're not assuming that a lot of people came in even at 8,000, 11,000, right? We're assuming that people came in a lot earlier.
Okay. I think people did. I think what you saw is in that huge run-up is that, but I think the question is it new money or is it you who's already invested doubling down? So is it crypto firm that already has 4 million in there buying another 2 million just to kind of get a quick up? Is it actually people who were, because you talk about money sitting on the sidelines. What does that mean, right? So I'm somebody who's casually interested in something. So am I putting my money into the market? Like, I think yesterday was crypto people doubling down, trying to cause FOMO. They did a little bit, but I think we've sort of dug ourselves in a ditch now because I think 13 is going to be, might be a little bit hard to get over at this point.
So when do you expect this to go back up?
So my timeline, I'll just be straight honest, I think my expectations are totally invalidated. I had expected us to kind of fall in the range of like, we started the year at 4K and I expected us to kind of end at like 8 to 10. So, usually when you're kind of looking at a market, you want to look at like catalysts, right? What's going to move the price up? What's a positive or negative development? I was surprised at the negative developments early in the year, like uncertainty about Tether, right? So Tether, we talked about that in the last segment with Chainalysis. Like so much money in the crypto economy is traded through this, largely experimental asset that we don't really understand. I saw that as like a huge potential risk because the systemic risk is still with Tether is the same with Bitcoin at 4,000 as 13,000, right? So there's like Tether is no stronger of a network now. The risk that they maybe have some adverse regulatory action still pretty high, I think. Like, if you look at the New York AG's case against Tether, it does seem like they have the money. It's just like tied up in a money laundering lawsuit in Poland. Like, I don't know how much investor confidence that instills, but it's definitely those are the facts of the situation. But I was surprised at how quickly that was eroded, right? So you had a lot of fear earlier in the year. The fear was because Tether was systemic risk. Because really what we didn't see coming down from 20,000, and I say this a lot, is that we didn't see a catastrophic infrastructure failure. So like in 2013, when the price went up to, $1,300 and then back down to 200, Mt. Gox was a catastrophic infrastructure failure. An exchange failed that had 70% of people's Bitcoin in it to 80%. I don't know what the projections are. People left the system with like not money, just claims, like for money that they lost.
And they were angry too.
Sure. So like the fear with Tether was that we might have like a catastrophic infrastructure failure. Now that doesn't seem to have materialized, I don't know what the risk is. Look, there's always a risk in crypto at some level that there's a black swan event, but I was just surprised at how quickly it was sort of eroded by these things. And to be honest, I was surprised that Facebook was kind of the catalyst for a lot of this. I would have thought, if you were to ask me at the beginning of the year when I thought I would see a $13,000 Bitcoin, it would have been, I would have said before the halving next year, rather than like during this year. And I'm not sure.
And you think it's because of the Facebook?
Well, I think that, and I think a lot of the guests, spoke to this, which is that they think that it's not necessarily new money, it's people doubling down. And I think the thesis is that Facebook was driving so much attention to the space and so much positivity that if the price was going up, well, then new buyers would get in. And maybe you create like a self-fulfilling cycle, right? The thing with crypto is that it's a lot of, it's almost all based on sentiment. There's not really a lot of, like you can't look at the corporate performance history of a cryptocurrency. It's not like IBM or like Apple. Though there is some sentiment that drives those things. Like crypto is entirely sentiment. And I think what you felt yesterday, what I felt is that, oh my gosh, there's just literally nothing between this thing and 20 because there's no historical price boundaries here. So that was a possibility, but then we ended up selling off. So.
Well, say I'm like some investor in Gun Barrel, like Colorado or whatever. I'm a dentist and I got a little extra cash. I see Libra come around, and I'm like, okay, so let me try this. Let's try this crypto thing out. Is that what you think is happening, or you think it's basically?
So from the guests who came on, like they seem to think that that person is not putting money in.
Okay.
I tried to get at this with the guests because I think this is kind of interesting. The Bitcoin price is like a really silly concept that people don't maybe think about enough. Like the average person, right? So earlier in Bitcoin, like there was a lot of like debate about how Bitcoin units should be sold. So and I spoke about this at like the CoinDesk Lunch and Learn like a couple weeks ago. There's nothing in the Bitcoin code other than just how miners are paid that really says what a Bitcoin is. Like just validates that unit. So it's really like managed by these exchanges and everything, right? So technically they could decide to sell a different unit or whatever, but you're basically buying 100 million bits when you buy a Bitcoin. So a real bit is worth like way less than a cent at this point. Yep. So like the average person just thinks Bitcoin is expensive, like right because of all these like mental model things that exist that are really just like arbitrary decisions built up over time. I don't know if I'm really answering your question, but I just don't think, I think people think Bitcoin is expensive.
Yeah.
Because they don't understand what Bitcoin is. And I don't
If you
think.
knock it out to 100 million or whatever, like the down to eight decimal places.
Yeah, you're buying
It's actually
100
really cheap.
million bits.
Satoshis, I
Well,
guess
who
you could
knows?
call
Like,
them, whatever, yeah.
the thing is that expensive and cheap are just sort of like arbitrary things. I think the average person thinks Bitcoin is expensive still, and I think that will probably remain the case for like a while.
All right, guys, if you have any questions for Pete, we can answer them. Let's see. People are just chatting right now.
What are they chatting about?
One guy got in at.
They were just talking about the price.
One guy bought at 12.6, and now he's very sad.
Yeah, sorry, guy.
Unfortunately, you can't.
Can you ask him why he bought? Why did he buy it at 12.6? Like, what was the reason that 12.6 was an attractive price for him? I feel bad about that.
You didn't tell him to buy it.
No, I did not. No.
You don't
Though I
even
do I do work for a website that has the price prominently displayed.
Well, I mean that's the buyer beware, as they say.
Yeah.
Carpe diem, I think, is the Latin.
Yeah. I don't know if I'm like talking too much there or that makes any sense, but
No. What do we got? Who is this guy? John Zatud.
I mean, are people actually saying anything interesting? Or
No, they're talking. They're chatting.
there's some XRP folks in there earlier.
Riverside Gives bought at 6. So
6K?
so he's happy.
Yeah, I mean, like, so another interesting perspective, like, Bitcoin's always funny like this. So, I mean, I've been in the space since, like, 2013. And the thought that I had yesterday, I guess I'll just share it in case you find it interesting, is that at $13,500 yesterday, there was only about 4 weeks or 3 weeks in the entire history of Bitcoin where you could have bought Bitcoin and then sold at a loss. And that's kind of amazing, actually. That basically says that, like, through the entire history of Bitcoin, Bitcoin is worth so much now at 13,500. Even 10,000. There's really only about 4 or 5 weeks in the entire history of the pricing of the asset where it was possible for you to sell at a loss. So the guy who sold it or bought it at 12.6K, I would say that, like, it's highly probable you'll see another situation like that where you're just like, Bitcoin will return to a level that is just, like, there was a point where Bitcoin hit 2,000 again, right? Or sorry, hit 1,300, which was the original top in 2013. Yep. And what that means, basically, like a return to parity, is that there's no point in that history of buying that asset that you could have lost money if you just held on to it. Like, you could have bought the asset at any price.
And it'll just go up.
No. That's not what I'm saying.
Okay.
It's like you could have bought the asset at any type in its history, and as long as you held it, you didn't lose money.
Okay.
That's like a slight difference, but
So Viral Taco bought at 4K and sold at 5K. So he thought it was a smart move.
Why
and
did
then
you think that was a smart move?
we're not sure. He made a
Is anybody like offering really any insights?
No, they're just talking about their price. And then we got John Zatut. He bought 1.81 BTC at 9.1, and then the last one he bought at 12.6, and now he's upset.
Yeah, but that's so. I mean, I hope the story that I just
No, I see what you're saying. So as long
it warms their hearts.
But I mean, as long as you hold,
it warms their bags.
It warms their bags. As long as you hold the bag, you're okay, because it's constantly going up. But as soon as you sell, it's like Schrodinger's
like
cat.
Constantly going up. It's not constantly going up. It's just like it goes up and down. It's just saying
Yeah.
like over a relative period of time.
Over a relative period, it's going. It's aiming towards the arc of Bitcoin is long, and it arcs towards high prices.
I'm gonna frame that quote.
Yeah.
And it arcs towards high prices.
Yep.
Wow.
All right, guys. Do you want to close up? Let's close
I don't know,
this up.
what are you talking about? What?
What else? Oh no, I'm just saying what else people are talking about. Is
I mean,
Kraken hit by the?
You were out in San Francisco, so what was the temperature of like San Francisco, where VCs running around? They're just like we need to buy this.
You know what? Everybody actually was. It was really, really formal.
Well, you were at a Bitcoin conference.
Yeah, no, but it's fine. Look, we talked to Blockchain Capital, for example, and those guys. So okay, here's how it's breaking down out
So you're
there.
taking advice from perma bulls. That's always good.
Yeah. So their idea, it's always going up. Their idea is that it's all equity now. They're buying equity. They're not dealing tokens. They're not doing a lot of
Really,
things.
they're completely out. Well, they were actually never really that in on tokens.
Pantera is almost the same way, and almost everybody that I talk to who's looking for funding is looking for equity funding.
I would probably buy tokens now. Like, I always counter trade the VCs. I think the VCs have done a consistently pretty bad job in crypto, but
yeah, well, that's true. But let's. So that's exactly. So if you have a startup or whatever, you're going to be selling equity. What else do we see? At the event, it was pretty. The Bitcoin 2019 event was was okay. Snowden showed up. Draper showed up.
Snowden was via video.
Video. Yeah. Interestingly, he came out as a Bitcoin user. He likes Bitcoin.
But there wasn't like the riffraffy like tourist people were there.
No. It was actually a small, nicer.
I just think that like
Voorhees was there.
Yeah, my theory is that I think Bitcoin needs to get back to 20,000 for the mainstream to really care.
Yeah.
I think as long as we're in the shadow of the mountain there, I think people won't.
So it
pay
has to
attention.
hit 20,000. You want it to hit, or is that the?
So this is another question I
point?
kept asking our guests, and it's something I've been trying to wrap my mind around. Is I think that the Bitcoin price like has to keep. So if you ask anybody in the space, like, and you ask them their future projections, they'll tell you that the Bitcoin price like has to be higher. And I have become more convinced that is true. One of the reasons is just that for institutional money to come in the space, there needs to be just more liquidity and there needs to be more value in Bitcoin, right? So like if you look at a pension fund that's like managing like billions of dollars, it's like their order just like crushes Bitcoin's order book. Like I mean the whole thing would just they can't even actually like in the market. They can get it on OTC and stuff like that, but the Bitcoin market is so small that if they were to like allocate any reasonable size of capital on their standards, it just wouldn't work. So, but I guess you get to the idea that Bitcoin needs to keep getting more expensive to grow because it's also like you're bootstrapping an alternative financial system. So, I guess I would say like the world has an economy, and now we're creating this like weird digital economy. Then in order for that like weird digital economy to be competitive with the regular economy, you would have to think of like online or like online offline commerce. Like there's some point where these things like become similarly sized, right?
So you're saying for anybody, any big institution to actually play in this space, they need to be able to buy a lot of it.
So the way that it would be phrased is that Bitcoin is still an asymmetric bet. It's one of the few things an asymmetric bet's a retail person can make.
Yeah.
And that asymmetric means it's like if you were to put $1,000 in now, your returns could be insane because it could be like $1 million someday, or you lose the $1,000, which means that your risk is like stupidly inconsequential. It's like your rent is like you lose your rent payment versus like you own a private island someday because you bought like half a Bitcoin. So that's what when people say asymmetric, that's what they mean, and that's why people still like Bitcoin for those reasons. So I don't know. I try to ask people reasons like why they think the crypto market, like crypto needs to be expensive. Or sorry, like there needs to be more value in the crypto markets. I don't know. I found that like interesting.
Well, we're thinking. I don't see anything here.
That's sad.
I'm thinking about the utility of Bitcoin in this case. So, at what? No, I'm just saying. Like, look, we're talking about a
Can
price.
we get like a laugh track for when somebody says utility of Bitcoin?
Well, we're talking. Okay, so what? So why is it going? Why is the price going up? What's the utility for?
Like,
Why?
what do you mean?
What's the absolute
See,
utility?
economies
for
don't
these
like
folks?
really function on utility. Like they don't. Really
Well, no. So okay. Well, we're not talking about Ethereum. We're not talking about programmatic utility. As a unit of exchange, is that what we're talking about in terms of the utility of it?
So I've sort of become convinced that the utility of Bitcoin is the utility of Bitcoin is so I'll give you the maximalist view. And
Yeah.
I would say that I increasingly think the maximalist view is like empirically probably correct. Is that Bitcoin's value proposition is it can never be corrupted or stopped, and that therefore you should want to hold value in Bitcoin. So the utility is merely that you hold value in Bitcoin.
For future interaction, if necessary.
Questionable.
I
think like, and I do agree with this. I think that like Bitcoin's value proposition is just it is now like utility has become defined much differently. The utility is just that can be hold, and no one can take it away from you if you're holding it. That has sort of become what we consider, what people consider utility in Bitcoin these days. And that's much different from the earlier versions, which was on spending and merchant and commerce.
It was all. Well, I mean, it's like the idea of creating your own financial network, but in this case, you're creating an asset that you can hold forever and be safe with, essentially.
Yeah, that's the value proposition. I think the other cryptocurrencies will take the more experimental value propositions. But I think Bitcoin is definitely, and you heard a couple of the guests like talk about that Bitcoin's really consolidated around the stored value proposition, not so much the spending. So like utility utility to Bitcoin doesn't matter.
Yeah.
Bitcoin's just going to keep getting more scarce. So if more people are buying and holding it, it'll just keep getting more. Like the value will keep going up.
Mirror is saying CNBC put an article out, how to buy Bitcoin. That's a good indicator that it's going to correct.
Yeah, so that's actually a really good point. So a lot of people have been counter trading CNBC for a while. So that's a popular meme on crypto Twitter is that like as soon as CNBC says something, like you basically, well, this like really played out. And so Brian Kelly is like a good friend of mine, I guess, or like I know him in the space, and like he did like this famous segment on Ricardo Pata by XRP at like 350, and then it just like sold off from there. I mean, look, I mean, crypto's a tough game. I mean, the guys, you know, I would say like counter trading CNBC, what you're basically saying is like, okay, I think that normal people will buy because of this, and this is a good time for me to sell my bags. This is why I thought that consensus would be the top of the year. When we saw the pump to like 8 or 9K, I thought consensus would be the top, because usually what you see with the smaller coins like Tron or XRP is that they hit their annual high around the time of the annual coin conference. Because I think the logic there is like, I assume that the most potential bag holders will be trying to buy at that time. So if I offload my bags to them, like that's the best time. Okay. So I thought that was going to happen at consensus. It didn't happen.
And then Robert Grasso just woke up. How might this crash go? Seems it's recovering, but I don't know what's
I mean, like, right look, now. I think like, so that's an interesting question. So when you look at a market, you know, you're really trying to figure out like where the historical. So there's two things. Like you can kind of like psychological support, which is like obviously like people care if Bitcoin's over 10,000. It's just like a term that people like. And then there's just like more. So like Omkar Godbool, who writes for us, like does more technical analysis. Like he'll look at like periods of resistance, right, where there's historical support, right? So like the traditional assets, like there's just a lot more data on things, and like traders, like more swing traders, day traders, short, you know, term traders make assumptions off this. So like the thing is above 10,000, because the original move from $10,000, I mean, it hit $10,000 at Invest, like we did our Invest conference in November of 2017, and then within 5 weeks it hit $20,000. So like there's no price history above $10,000, so we don't know. So if you're like a swing trader or like somebody trying to make a short-term bet, there's just no price history. Like Bitcoin has never been at $11,000 for 3 weeks or 2 weeks or even 1 week. Bitcoin has never been at $15,000 for 3 weeks or 2 weeks or 1 week. Bitcoin has never been at $18,000. It literally happened within 5 weeks. There's just no price history. So I think one of the reasons you're seeing the pullback like back to 10 is because just there's nothing above that. Like people don't know, and markets are usually adverse to uncertainty. So like people, you know, markets theory would dictate that somebody who thinks something is risky, like won't do that. And why won't they do that? I think one of the reasons like people who are very short term in the markets, and I think people underestimate like how active that segment is. I think there are a lot of people who are fairly short term in the market and the way they look at things. I mean, I think even in the thread we like saw some people mentioning they're buying at 12K or 8K. So yeah, I just think there's not a lot of price history above this level. So like, what do you do? And the answer is if you don't know, like I'll give you a good example. Like, so if I know that like gold never goes below $600, this is based on nothing, right? But if I knew that, like historically, I could prove that like most cases that happens. Then I, as a trader, I'm going to use that information and say like, okay, well, I'm going to buy back in at 600 because I know that like that's kind of where it bottoms out. Yeah. Above 10,000, Bitcoin just has no price history. There's no way for you to say that people will demonstrate a behavior within the market. So I think like you really have to go back to like 6 to 8 to 9 because like that's where the price history is. Like people don't know, and maybe it like recovers here. It could go sideways for a bit, even without that. But I would say that you are operating right now without a lot of history.
Yeah. Well, yeah. It's unusual to be past the 10,000 point, right?
Yeah. As I said, there's really only this would probably be like the 6th week. I'd actually be interested like how many total days it is. Like maybe somebody should look that up. I think it would probably be less than 60 days that the Bitcoin has been above $10,000.
All right. Very cool. All right. We have anybody have any final questions? We're waiting here for your information.
I mean, what do you think about it?
What do I think?
Yeah.
Well, look,
the other thing is the alt market's completely dead.
Yeah, alts are dead, and Ethereum where did Ethereum go?
Is that a real question?
Yeah.
Well, Ethereum has a lot of uncertainty priced in it because it's like they need to migrate to proof of stake. Yeah. So I mean, Ethereum is, and actually one theory that I'm like toying with is that I think that the alt market might not return until Ethereum does. Like so, all the alternative cryptocurrencies that kind of came to rise with Ethereum. So the way that you would think about this, or I would explain it, is like Ethereum is going to change its consensus algorithm. So at some point, they are going to change the fundamental economic relationships of the actors on their blockchain. And they're going to do this in the next 1 or 2 years. So they're going to change from proof of work, which is what Bitcoin uses, where people like turn on computers, they like burn electricity, and they use that to create the new assets. And they're going to switch to a system where people actually, instead of running very expensive computers and chips, they take their coins, they put them in a special sort of wallet contract that like freezes them, and basically, sets them aside for like virtual mining sort of. And they're gonna navigate to that system. And the thing here is that is totally different, because when I am a miner within Bitcoin, I'm running computers, I'm paying people to manage them, I own physical space in which they're housed, I have real world costs that make it expensive for me to do this. In proof of stake, like you're basically just kind of moving your coins to a special wallet, and I think the Vitalik theory is that like you can delay like how easy it is for people to do this. But again, you're moving into a system where people are going to behave as economic actors differently. And I think until Ethereum makes that transition, there's going to be a large amount of uncertainty in Ethereum that is priced in. So like last time when Bitcoin was at 10,000, Ethereum was at 700. It's at $350 now. I think part of that is because people are uncertain about the transition, and like also Ethereum is facing a lot of competition from below from like other smart contracting platforms. So like EOS came online, Algorand, Enigma, which is kind of an interesting thing. Some disclosures, like I think I own a couple of those in my bio. But like the smart contract systems, like there's more competition against Ethereum.
Yeah, I mean, if you're asking me what my opinion on this is it seems like all the altcoins are basically hurting right now. The idea of creating a separate token is gone, and until all regulation, like your own token for your own startup or whatever.
Like you mean when you wanted to do it for your like
security token, my walking thing, exactly. So I want to do my
It's all timing. It's all timing.
It's all timing. It's all completely timing. So until all that stuff gets regulated into reality, we're going to be in this kind of place where it floats up and down between potentially 18,000.
Yeah, but like the interesting thing about that is the SEC has sort of come out and said that like, and I would kind of disagree like to the extent that they've like really mean this, but they have inferred on multiple occasions that Ethereum is not a security. So even if we were to assume that Bitcoin and Ethereum are the only assets exempt from that, it is crazy that Ethereum is not as high as it was last time. And I think that part of it is because people are pricing in like both the competition from other chains that's priced in, and also like, if Ethereum switches its entire economic model mid-flight, I mean, and I've said this before, like, and I feel like I'm comfortable saying it on video. It's like that will be as significant of an achievement as like original Bitcoin. That's like a really, I don't know if maybe that is too much, but it's a very hard thing to do. It's going to be a significant achievement if they do that.
Okay.
The price of Ethereum will rebound significantly if they do that.
All right. Let's see. I just came back from Bali.
Well, welcome back.
Yeah, not me. So there's a much foundation above 10K.
Yeah, I was saying that.
Yeah.
Was he asking about it?
Yeah.
Or he or she?
Them. All right. No, I don't see anything. All right.
Just all
Commentary. They're talking amongst themselves as we chat here at Pump and Dump.
Right. I don't. Nobody's approved that title for the show.
No, that's too bad. I like that one.
Yeah. So I don't know. Like future expectations. I guess I expect like 13 might be hard to cross now. I think it's possible that 13 becomes the cap for the year, but the halving is coming up next year, and that'll be a big event.
How does it feel when any of your predictions are like proved right or wrong? When was the last time that happened?
Well, so like when it went up to 13K, like I had said that it was going to range for the whole year. I think I readjusted my thing a little bit. I still think that it's going to be a sideways year for Bitcoin. I don't think we're going to get above 20 this year. I think we have to get above 20 for mainstream interest to return. So I think I adjusted this model by like, so I've been really into the idea that the current market might be similar to the 2017 to 20. We're in the 2017 to 2021 market.
Yeah.
The 2013 to 2017 market. So a lot of people are like looking at market cycles in Bitcoin, and this is something that like we're really trying to understand is like, can you make similar models? So I'll give you like one random data point. Like the Bitcoin hit an all-time high in December on 2 different occasions 4 years apart. So there's once in 2013. And welcome back to CoinDesk Live. I'm Pete Rizzo, editor at CoinDesk. Today, Bitcoin is back trading below its 2019 highs. Press time about $700 over 10,000. But with the market apt to move in either direction, just about as quickly as it can, we're bringing you interviews with crypto markets experts. The next one on tap for this afternoon, to my left, Mr. Hassan Ahmed. And he's the Director of Finance and Operations at eToro USA, which is the world's largest social trading platform. Welcome, Hassan.
Thanks, Pete.
So we were talking backstage, below 10,000. Possible?
It might happen while we're talking, so we never know.
So maybe back people up for why are you not super confident in the price of Bitcoin above 10,000?
Sure. So let's take a step back and just look at what the trend and channel that we're in right now, right? So if we look at where we were at the beginning of the year, and I think even by mid-February, we hit that sort of low around that 34,600, 3460 support. And at that time too, I think people forget that we were expecting another 50% fall off, or there were calls for like 1,700
So
at that time.
you were thinking below 2 was a possibility at the time.
I think there were voices in the market that were saying that, you know what, this
I'm sure a
may
lot
not
of people
even,
wanted to buy at that
right,
price, yeah.
this may not even be the bottom. So I think we forget that there was so much doom and gloom just 4 to 6 months ago. We were able to consolidate, and then at the end of March, beginning of April, thanks to the consensus bump, so thanks for that, Pete, we were able to.
I love that that's a thing now. I didn't, you know.
Except for last year, it's worked so far.
I guess when you make a big billboard,
things happen.
things happen, yeah.
So we were able to get out of that sort of consolidation channel and hit 6,000, and then in the last 3 months alone, we've almost sort of 3x from where we were on all-time lows. That's a pretty
Well, not all-time lows, but
sorry, this cycle.
in this cycle.
Yeah, all-time lows for 2019.
Yeah.
And so just going off of that, this has been a very almost parabolic increase that we've seen all the way up to 13,800 and something, right? So I think that correction was inevitable. It was due. And where we're going to end up, I think it's sort of, we'll still see where we end up, but I think it's a healthy correction. I think it's good that it happened. I think it makes this rally and the trend more durable. So it's not a bad thing.
So one of the things I keep asking the guests is, you talked about the earlier in the year, 3,000, 4,000 range. What price depressants, negative kind of sentiment, storylines, narratives were around then that were removed? Because I actually have trouble looking back and seeing what actually went off the table here.
Yeah, I think the biggest
Tether's still obviously a concern, right? That's not any less of a systematic risk maybe than it was before.
I think your point is fair. I think what happens is sentiment shifts take time to kind of work into the system. So what you saw in 2018 with the bear market, there was no amount of good news that could move the market sort of off of that direction that it was taking. And kind of Bitcoin and sort of the crypto system just had to shed off that excess that had sort of worked up through sort of the ICO system and all the other kind of coins that had like pumped up unrealistically. I think once that was sort of done, there was some Tether FUD and there were some just ETF delays that just kept sort of disappointing the market. But it hit at a certain time and a certain point where I think everyone was just like, this is it. This is what we're willing to absorb, and now anything sort of below that becomes like a decently good buying opportunity. There's also other parallels that we can draw to previous market cycles we've had. So if you look at the drawdowns that we've had in the previous cycles, that like 80 to 85% range from all-time highs seems to be like the sticky point, or just a market-based consensus point of like, this feels like.
Some would say it's kind of like rounding up, but yeah.
Yeah, but that's sort of, I think, those are the factors that led to just that bottom happening.
So I'm curious for your perspective, why 13,500 as the local top? What do you think about that price spooked some people?
Well, if you look at how sort of levels of support and resistance get formed, I think when we had seen sort of the last rally come up before that kind of crazy rise, almost from 10, 11,000 all the way to 20,000, there had been a little bit of, I think, resistance that we had even in the previous rally before kind of retracing and then going up again. I think in this case, it's not so much that there was some resistance that was earmark or benchmark from previous cycles, but I think just the pace of like how Bitcoin had risen up was just getting extended and extended.
So you think it was
until
the viewpoint was from below rather from up high? Because I was saying there's really no historical data once you get above
Right.
10,000 about what price the market will accept Bitcoin at.
Yeah, I do think that between 13,000 and 20,000, there's very little points of resistance or places of benchmark that you would expect, Bitcoin to kind of hit some sort of a headwind. But that's just the market structure and how it sort of played out in the past.
So curious for your perspective, is Bitcoin as an asset on your platform, does that account for the majority of cryptocurrency trading? Do you have a figure for what percentage Bitcoin is versus the wider market that you offer?
Yeah, I mean, for us, so yes, Bitcoin is the majority of sort of our kind of trading volume within the tokens that we offer. We do, compared to some other platforms.
What's the number now that you offer?
So for the US, we're offering 14
Right.
of roughly the top 15.
And percentage-wise, it's like over 50% Bitcoin, under?
Different regions have kind of different variability for what they're thinking of Bitcoin versus others. But uniformly, Bitcoin is the dominant kind of trading pair for all of the cryptos. Yeah.
Over 50%, or?
It's usually over 50%. Let's put it that way. Not all.
I'm just curious
because
because
over 50%.
I think a
yeah.
narrative that's kind of forming
Yeah.
is that it's Bitcoin and everything else.
Yes.
That seems to be one
right.
of 2019's narrative, is that the lack of confidence in the alternative
Correct.
cryptocurrency market,
Correct.
lack of belief in that their use cases will pan out. Maybe, I guess, what's your take on that evolving sentiment?
Yeah, I've been thinking about that a fair bit, and I think there's a few different things that are going on in terms of kind of that Bitcoin dominance percentage, which is roughly around like 62% for the overall market right now. So one is I think just this notion that institutions and like qualified institutional buyers and family offices are the ones that are coming in a way that they hadn't been before. Fundamentally, part of the reason for that is better infrastructure, better custodianship, just more investment committee rounds that have happened over the years, more data for institutions to work off and get comfortable with this asset class. So I think they're starting to dip their toes in the water. But frankly, I think heuristically, right now, all they're interested in is just Bitcoin. And some of the signals that we're seeing around that are like the OTC volumes that we've seen that are just kind of off the charts. I think Mike Morrow from Genesis was saying recently that their volumes are like 2 to 3x from last year. So I think that's one reason for why kind of Bitcoin is performing the way it is. And I think the second is, to your point, the market is still somewhat disillusioned about the potential of these alts sort of reaching, being able to reach their potential, given sort of how they're usually marketed at the beginning. And frankly, these are all R&D experiments, right? They're public R&D experiments with a value of a token on top, so everyone has an opinion on it.
Follow-up question to that.
Yeah.
Does Bitcoin need to hit all-time high again to really galvanize mainstream interest? Because you mentioned market cycles, and I think one of the interesting parts of market cycles, I think you know the theories that I'm talking about, because it sounds like the 85% drawdown, it assumes that really what we're looking for is the price to hit parity again, and then it sort of blows off and then comes back down. So you do believe that we need to go above 20 to really get the next bull cycle?
Yes, I think that has to happen. I think if we look at the previous 3 to 4 market cycles that have happened, every time now when you look at those charts, from way back, it just looks like a blip, leading up to the next
classic
time.
Bobby Lee chart there. Yeah,
exactly. And so I do think that what happens is once you get close to or start cracking that previous all-time high, it does I think the headline value of that alone just sort of pulls in that next round of people that are thinking about, oh well, maybe I've missed out for the first time around, maybe I should get into it now before it's too late. So that behavior starts to kind of build in on itself. For this one, because like prices are on an absolute level are so high already, I think 10,000 is a nice kind of psychological number. I think 15,000 is a nice one. So I do think that this time around we might see it, even earlier than like previous all-time highs.
Once again, taking questions on YouTube and on Twitch, where we're streaming a couple things in the thread here. This question from Robert Grasso: do you think Bitcoin will become insignificant in the future in comparison to other cryptos?
That's a great question. Thank you for that, Robert. It's something that we talk about internally, and there's 2 different sort of opposing camps onto it. I personally believe, and I think as a company, we're extremely bullish on crypto in general and Bitcoin in specific, because of sort of the Schelling point, because of the network, because of the brand. It's gotten to a point where so far there haven't been any contenders that have been sort of serious challengers to Bitcoin's dominance. And also, I think just the way that Bitcoin is programmatically set up in terms of its scarcity, in terms of it being mathematically metered and auditable, it continues to provide value against this narrative of digital gold or store of value, much, much better than anything else sort of that's out there right now. So we do think that the escape velocity for Bitcoin is there already.
Mm-hmm. So I'm curious, do you think that where you mentioned, we kind of talked about the market cycles, what does the recent run-up remind you of? Is there a historical period within Bitcoin where you think, oh, this is very similar, we've seen this before?
So this one, frankly, to me, actually doesn't resemble 2017 as much as it does the one prior to that, which was the 2013 run-up. The technicals around this one and also just the fundamentals around Bitcoin specifically feel a lot cleaner. So if you recall back in 2016 when we were having the scaling wars, when the New York Agreement was being signed and Bitcoin cash was coming into its own.
Yeah.
It feels like a scar now, but at that time it was real, and we were uncertain of whether Bitcoin was going to survive. Right now, if you look at the fundamentals, the number of on-chain transaction volume, the number of accounts that have been created, it all sort of is a very rosy picture at this point. So in that sense, I think the way that this rally will be sustained and fueled follows the cycle before this one much closer than the last one. The last one, just to kind of add on to that, was way more driven by ICOs.
Sure, because that money was reinvested in Bitcoin.
There was a lot of rotation. Just easy flips were kind of coming in and out, and then people were just pouring that back into the base pair, which Bitcoin still is today.
I want to draw another comparison. Obviously, in 2013 and 2017, there was no regulated U.S. futures market. Right now, there is CME and there's LedgerX yesterday, which came out with their physically settled Bitcoin. Big story, came out on CoinDesk. But does that change the calculus for the price move? Because now the institutions can come back in and they maybe can short it again.
I think when CME came in last year, that was a fear that the market had that, I wouldn't even call it a fear. There was just more flexibility to take different viewpoints and express your viewpoint in terms of an investment position on Bitcoin. That by itself did not necessarily unhinge the growth of the market. So I think even having those options again, and even with some of the rehypothecation that may be coming up, it hasn't seemed to have a direct impact on the market so far. I think if enough volume comes in at a certain point, and I do think that this market will continue to mature, there's going to be more liquidity and there's going to be institutions on both sides of this. The volatility may start sort of going out, but at the moment, it doesn't seem like it.
Who is the buyer in the recent Bitcoin run? Do you have an idea of what this person looks like, the characteristics of them?
So there's two sides to this. I think one is the institutional side that we've touched on a little bit. I think on the retail side, we are seeing some new retail action. But let me put it this way: when we're talking about our growth numbers, we're talking in percentages, not multiples. And it's still not that kind of like retail-driven rally that I think we saw in 2017, partly because of the ICO market and the factors that we talked about. So I think this time it's a little more. It's people that maybe have tried the crypto market before and maybe have had time to study up on it or are a little more aware. And then there's just newer buyers that are kind of dipping their toes in the water again, but not en masse.
So you think this is existing buyers doubling down?
There's a fair amount of that we're seeing on our platform. We're seeing a good amount of called redepositors that are coming in.
And how are you measuring that by these are existing account holders who are now becoming very active?
Correct. There's some accounts that have been dormant for a while. They were just either underwater or they deleted their apps and now they've reinstalled them. So we're seeing them kind of come back up now that the sentiment has turned positive again. And then there's some X percentage of just newer buyers that are coming in as well.
Want to turn it to outlook for the rest of 2019. I'll be upfront saying my prediction is I thought we would range probably between 5 and 8, maybe as high as 10 this year, having being priced in towards the end. Does this change whatever your calculus was? What was your calculus? And is it different now? Did this blow through your expectations?
In certain ways, it does. I had pretty moderate expectations out of this year. I think, we haven't touched on the halving event, but that's coming up in May 2020, and so
Because we got I know like another platform which was originally took off with digital investors, now very crypto focused, a lot of their traffic.
Right.
Is that similar to you guys, where crypto now a significant portion of the overall business?
It is. I mean, in 2017, it was almost dominant. eToro is a platform that's traditionally been known more for CFDs and commodities and currencies. But in 2017, the mania just completely swept over. And so all our existing active users on our platform were rotating into crypto, and we were just, the sort of level of client onboarding in 2017 was out of control. I think a lot of that effect still persists today. just in the U.S., for example, like we chose to go crypto only first because I think the company has a lot of conviction behind this asset class again, and it's something that we think is going to continue to play for a long time.
Interesting. And so in terms of the percentage there, I don't know. I lost my question there. But that's really interesting. Yeah, I find it interesting because it's almost a demographic change. Is that really what you're saying?
That's part of the equation over here. I think we talk a lot about this generational wealth transfer that's sort of in motion, and I think in addition to that, just the newer generation being much more like digitally native, and frankly, like this online offline like lines are just like blurring away. So as part of their identity, I think having a native digital gold makes a lot more sense than your traditional hard metals.
So do you get worried about Fidelity and TD Ameritrade? Do they take from your users like E-Trades? If those people start turning on cryptocurrency options?
We welcome everyone to kind of jump into the pool. I think right now, the rough estimates are that maybe about 45 million accounts are active. The people that own like cryptocurrency. So we're
through eToro or
no,
okay.
in general.
In general. And those are accounts just like wallets, or what's the?
Those are just rough estimates.
Okay.
That analysts have sort of trying to back into in terms of trying to triangulate between like number
Like
of
how many
average
people
accounts
own,
per,
yeah.
and how much the exchanges own as sort of omnibus accounts. But so we're still so early on, and there's just as an industry we all need to be doing a lot more in terms of educating everyone else, like the next sort of few 100 million users. So I think, Fidelity and Ameritrade and TD, like everyone should want to offer this exposure to their customers because at some point they can't afford not to.
All right, it looks like we're winding it up here. Price prediction for the end of the year?
So one scenario that I would like to see play out.
Preferred scenario.
Yeah, one scenario that I think is entirely within the realm of possibility with this recent price action is I think we cross the previous all-time high by Q4. That's right. That's right. It's crazy, but it could happen.
Before the halving, though?
I think in anticipation of the halving.
Yeah, maybe.
I think I'm putting a lot of weight on that event, maybe more so than you are. But
well, I just think last time we didn't see it re-hit all time. But again, I know you can't draw parallels, which is,
Yeah, so
I think Willy Woo's new theory is that this is more like the 2013 cycle. Did you hear this? I don't know. He tweeted recently. I'm not sure if you follow him, but
I do. Yeah.
Yeah, he was saying that he thinks this is more like the 2011 to 2013 cycle, and that it's going to be a lot quicker and faster.
Well, if it does, then more power to him.
What would I have a hard time? So you think we can get back to 20,000 without the ETF? Maybe backed still isn't up. You still think we can get to 20 without those kind of events?
I think there's enough in the hopper with even other players that are looking at very interesting things, and there's enough validation coming to the industry. We until 2 days ago we were like 47% away from the all-time high, which is not that much in sort of the crypto scheme of